quick one, Kush. Triveni Engineering, Kalyan Jewelers.
Yeah, avoid Kalyan. Run up too much too fast, and then you see sharp gashes on this one. Triveni Engineering, by the way, setting up beautifully right now. By the way, on my charts, it's a little distorted because of the kind of pre-opening rate that is being suggested. So I'd wait for about 9:15 or even 9:08 for that matter, just to give you a very clear view. But this was setting up actually rather beautifully for an uptrend.
Okay, so that's Triveni Engineering. Stay with us. Metro Brands, that's another one that we should be watching out for. If you can just pull up, 11% is what pre-open is indicating. However, your first quarter has seen a strong growth. It's the wedding season demand that has led this kind of growth. And the sentiment somewhere has improved from mid-June 2026 as well. To discuss about the earnings and what has worked, what has not worked, joining us is Nissan Joseph, CEO at Metro Brands. Mr. Joseph, welcome to the show. Always a pleasure to speak to you. This is Hiral on this side. My question to you is, overall profits, that's the only concerning area which has remained kind of flat. I mean, it's just a 4 to 5% downtick there. Margins, again, a mild dip coming in there. However, your revenue growth has been strong. It's the wedding season that has led to this growth. So what are the concerning areas which you anticipate that could continue in the coming quarters as well?
Hero, good morning, and thank you for having me. I wouldn't call it concern areas. Let me break it down for you. First of all, on one side of it, on the revenue side of it, our gross margins last quarter were the highest they've been in the last 5 quarters, coming in at 59.7% gross margins, maintained margin for the business. So I think that's a terrific run-up that we've had. The other thing is our sales per square foot has maintained at right at 43.50 for both quarters, this quarter, the last quarter, and a quarter year ago. Now, on the other side, when you look at our profit delta, it can be explained in four distinct buckets. One of them is we continue to invest in our marketing. We're over-investing in marketing. We continue to do that because we believe that creates long-term value for the business. Number two, there's a shift in treasury income. Last year, we had a great kickoff from the treasury income. This year wasn't as strong. And as you know, we carry quite a bit of treasury. So when you get earnings from that, it blips it up a little bit one way or the other. The other one is, of course, that we've invested heavily in talent. We believe we need leadership talent to run this business up to our aspiration. And last but not least, we definitely had 140 new stores that we opened last year. New stores don't come in at the same rate of performance and the same metrics that your existing mature stores do. So when you look at it from that standpoint, overall, I'm very pleased to see the quarter we had. And more importantly, as we look to the future, across our many brands, across the price points that we serve, we're seeing demand come through. And so we believe we can continue to hit this 15% growth rate and continue to deliver, the 15% margin, not to talk about the 30% EBITDA that we run on a consistent basis.
Very close to that number. Mr. Joseph, thanks so much for taking the time as always. Good morning to you. Just a point on the tailwinds that you benefited from on the GST side, right? One was assuming that would carry out for some time. Are you still witnessing some uplift on account of that advantage that you got?
Yeah, so we never saw a big advantage from tailwinds because a couple of reasons. One is we report net sales, right? So the sales take out the GST impact. And then the other thing is, where we had a GST benefit, we've turned around and passed it on to the consumer, right? So that was not the driver of the tailwind. I think that the drivers to the tailwind that we have is, one is our Clark's business is doing really well. It's come on very strong. We had, other headwinds that we actually countered last quarter, with namely, for example, monsoon was delayed. Last year it hit in May and June. This year it didn't come till late June and in July, which, as you know, monsoon is a big driver for our Crocs business, but that's rebounded in this quarter. So, it has its tailwinds and headwinds that we see, Alex. It's just not one thing. But overall, I'm quite pleased to see the quarter come through. I'm quite pleased to see the demand across the multiple banners that we operate, across the different tiers of cities that we operate in.
I was actually referring less to the financial implications and more to the demand scenario and the fact that, and you've essentially laid that out. You said that you did see demand come through in most of the categories that you operate in, and I'm guessing more so in the places where you managed to pass on the benefit to your customers. So therefore, if you can give us a sense of how things look, not necessarily just in FY27, but if you were to project Mr. Joseph, ultimately, people love talking about footwear companies, right? Because that's the one thing you can be sure that people are going to be using even 10 years from now. So therefore, if you were to project heading into FY29, what are the kind of growth rates that you anticipate you'll be able to put together?
Yeah, I think when you look at the vectors that drive the footwear business, one is most of the footwear business, and 70% of it is unorganized, right? And we're going to see that shift go from unorganized to organized retail over a period of time, over those 2 years. And that's where the banners opening stores, the opportunity for them to open stores in multiple geographies across India continues to remain high despite having, have over 1,000 stores today. So that's number one. I think the growing aspirations of the Indian consumer is something that we can cater to, whether you're going from a value priced unorganized retailer to an organized retailer, we have our walkway brands there. If you want to go from that level to a different level, we definitely have the Metro and the Mochi brands there. If you want to go higher than that, in the athletic space, we have the Foot Lockers out there. So we're capturing the market across the different segments, across the different price points. And we really see a long runway for growth for all of our banners. And, we've guided to 15% because, in retail, you blip up, you blip down. Sometimes you're well ahead of that. Sometimes you're a little bit behind. For example, late this quarter, we might have a little bit of dampening because, Diwali shifted out by 2 weeks. That puts us key selling seasons into next quarter, but we'll rebound the next quarter. So overall, though, we're seeing very good demand.
Mr. Joseph, the question that I have is, double-digit revenue growth is what you're already talking about, and we've seen that in the past as well. The profits have not really kept pace. So if you have to look at FY27, do you think it's going to be a year of growth investments, or is it going to be a year of, say, earnings acceleration that you're looking at?
I think we are, first of all, Hiral, I do want to point out that, most of the quarters in the last year, if not all of them, we've outperformed our peers, right? So it's not, while one can take that number for granted from Metro Brands, it's not an easy number to hit. And, the fact that we outperform peers on a consistent basis, or at least on an aggregated basis, it is a reflection of the team and how hard they work. So that's number one. I think from a profit standpoint, if we weren't growing new stores, if we weren't trying to invest in multiple banners, then we would start working on our earnings. But while we have this runway for growth, it's important that we capitalize on that growth, though they don't come in at the same metrics as our existing mature stores. Whatever that might be, our mature stores might be Metro or Walkway. Our mature stores are always much more profitable than our new stores. But that doesn't stop us from investing in new stores. We just want to make sure that as we open stores, those stores are profitable as well.
Mr. Joseph, we'll leave it at that. Thank you so much for taking the time out and being with us. Really appreciate your time this morning. Well, viewers, joining in a bit late, but in time for the market open and in time for me to be updated that Parag Bhai has also said that the index could hit all-time highs this year itself. I think the tailwinds are set. We were talking about this yesterday, that fundamentally things are looking okay. As the pre-open rates have settled, just a quick check. Deepak Nitrite on expected lines is the top gainer, up 7.4%. Splendid numbers, and maybe we've discussed that already. But that, Sundaram Fasteners, Triveni Engineering, and I remember Kush saying that he would want to give a call on it post the pre-open rates have settled. And Airtel, 2.53% higher. Really strong show by all of those. Before I come to our guest, Sharad, a quick one from you, because you don't normally see Dr. Agarwal's come into focus on a brokerage radar. Why is it that Jefferies has picked this up?
Well, yes, Neeraj, this stock is generally not discussed amongst the brokerages, but Jefferies has upgraded it to buy from hold rating, and even the target price has been hiked from 510 to 600 rupees. They're bullish on the earnings which has come in, especially in the June quarter. The execution was strong. Expansion is continuing across all the regions, and they're expecting a mid-teens volume growth, as well as premiumization angle is also there in this thesis. The SSG growth continues to be robust going ahead, and this upgrade is happening on the faster ramp up of new facilities which are being driven by a strong volume led growth, and that is why Jefferies is bullish on Dr. Agarwal.
So that's Sharad. So interesting one. But I think the ones that deserve a conversation, and Ajit Mishra joining in as well, and we'll get to him too. But I just want to go to Parag Thakkar first. Parag bhai, we're talking about large caps and how well they are doing, because if the index has to do well, large caps have to perform. I have two names for you which you like. I would love to know if they are good to buy, because both of them are in event. Airtel, the event is behind it. The stock is up 2.5% today. Hindalco, 2 events ahead of it. Novelis today,
Novelis
Hindalco
7th,
Friday.
yeah.
Right? What do you do with both of these?
So I hold both of them in truckloads.
What would you do today? If you didn't have them, would you buy them this morning?
No, basically I'm not a momentum chaser, so I'll not buy it.
So you'll not buy Airtel?
I'll not buy Airtel at this price.
And you will not buy Hindalco also?
Because now it has gone up a lot. So just because of that, I'll...
So you would have bought 10% lower?
So that's what, yeah, it is.
The undercurrents into both the Kushbora
are
very
fantastic,
strong. How are they from a trade perspective?
Airtel, you might want to book profit if it's a momentum play. Hindalco, you could still buy. You're still having, these uptrends, key averages being taken out, volumes also very healthy. So yes, at these prices, you could buy for positional targets of 1,080 and about 1,130 as well. Supports at about 995, 985 zone. So Hindalco is a buy at these levels also. Bharti, not so much.
Got Ajit, I want to come to you on a couple of these stocks and the metal pack per se. What would you say about the trajectory of some of these?
Yeah, good morning, Alex. So, Alex, largely if you see that we are seeing rotational buying across sectors. Metal was sitting on the sidelines of late, and we have started seeing fresh traction across the board. So, it's not that one or two names. It's in fact, the majority of the stocks are participating in the move. We were just discussing Hindalco. So, basically that definitely bodes well, in terms of the price action. Means it has recently surpassed its swing high, and we anticipate this 1,060 being the immediate target area with stop at 995. And then we have said also, wherein we are seeing that the stock, after retesting its long-term averages, has formed a fresh buying pivot. It's in fact a negation of a negative candle of late also. So all these factors put together indicate that this recovery is likely to strengthen further. 185, 190 is what we are eyeing as an immediate target zone with stop at 165.
Okay. Top stock call this morning, Ajit?
Yeah, the first is Hindalco, because after this consolidation phase, majority of the metal counters are participating, and Hindalco is leading from the front. So 1,060 is what we are eyeing as a target zone, with 995 as a stop loss. And then we have Siemens also, which has witnessed a sharp breakout after a tried consolidation range around the short-term moving averages. So buying pivot formation basically. So 4,300 means we can anticipate the stock to retest its record high. So with stop at 3,850, one can accumulate Siemens also.
Okay, Siemens and Hindalco, which is becoming a consensus call, will take in Kush's top call post-market open, Ajit's index call post-market open. Here's how the markets are starting off this morning. Policy day. Maybe the markets stay quiet until the policy, and well, what happens post that remains to be seen based on the commentary, but not a bad start. Remember, we'll continue to see, viewers, this dichotomy, if you will, between the Nifty and the Sensex for a few days until this whole cash session settles down. I think there's a lot of debate around it. I don't want to add more to it. But the index is, Nifty is flat. The breadth is very positive, 1497 to 327. That is extremely strong market breadth, really. Almost as if the index was up about 1% or more than that. The bank Nifty is flattish. IT index should come up on your screen for a moment. Just want to mark that, and just want to see if the Nifty auto is still building on, simply because the monthly numbers, sales numbers are so strong. Yes, indeed, 1/3%. Let's get the heat map up on the screen. Airtel would be one on the radar and see what that is doing. It is amongst the top three, but yes, on expected lines, Interglobe Aviation and Larsen & Toubro, top of the pile. Again, you could argue that geopolitics is the reason for it. For Indigo, it is crude price. For L&T, anything getting resolved in the Middle East is also a bit of a tailwind. Shriram Finance, Wipro, Bajaj Finance are amongst the others. This one too is not letting go, by the way. There are enough people who said that maybe it might be good to book profits here, but Bajaj Finance is smacking of some bit of institutional buying activity over the last 1 month. Even Stevenson gainers and losers. What is losing out? Apollo Hospitals 2%, Nestle about 1.5%. SBI Life comes off, and there is a fair degree of announcements on insurance, not on the life insurance but on general insurance. But be that as it may, SBI Life is down, and TCS is negating what Wipro is trying to do on the IT pack. So that's the large cap space. Crude beneficiaries, Alex, essentially, or Middle East beneficiaries, if you will, and Airtel.
But you know what, Neeraj, I think we're going to have to get used to the fact that you will see different percentage change numbers for the benchmarks. And I think that's just something that we're going to have to live with for some time. Let's talk about the sectoral indices, right? And let's take a look at what's moving today. It's much more green on the screen than you saw yesterday. In fact, yesterday you had just about 3 or 4 indices that were in the green. It's a very different screen today. Realty, which was the bottommost index yesterday, is once again in ascendance. It's up about 1.6% or thereabouts. Small cap index is doing okay. You have the PSU banking pack that's once again at the forefront, but gains of about 0.6%. Metal, on account of some of the names that we've already mentioned, is likely up and about. And on the downside, you have FMCG. This is likely on the back of Nestle, which is down over 1% or so. It's the worst performer in the Nifty 50, and because of the weight that it has. But I'd be curious to find out what Marico is doing. We'll find out soon enough. In fact, let's jump straight into the earnings reactions, and a few of these stand out. So let's look at Castrol, for example, where you've had strong volume growth that has come through. It's up about 2.5% or so. Nykaa is something that we spoke about this morning as well. It's had its fashion segment GMV that has gone up as much as 53%. So let's pull up that stock. Let's talk about Nykaa. Let's talk about Marico. Interesting, very interesting that Marico is down about 2% or thereabouts. BSE also had a decent set of numbers, but it's still down about 0.2% or so. L&T, Beck, Avalon Tech, Uniparts India all had turnaround quarters. L&T, Beck seems to be the stock of the day so far, 20% up at this moment. Uniparts also doing well, up about 4% or thereabouts. Let's look at Ask Automotive, revenue uptick of as much as 52%, doing well. Deepak Nitrite also had a strong growth in especially its phenolics segment, and this is something that was on Neeraj's watch list and he told you about today. PTC India announces a 23 rupee dividend, which is quite substantial, 13% yield, but the weak numbers are something that you should pay attention to. Don't just focus on the dividend payout. In terms of underperformers, and there are a couple of them as well, Dredging Corporation of India is one, but Welspun Enterprises is the one that is really taking it on the chin. It is a demand downtick that they have witnessed and had to bear with this quarter. So that's the earnings reactions. Hiral, I'm wondering whether any of the other corporate actions have evinced a reaction. I didn't see too many, but I'm guessing that there will be a few movers in the broader markets as well.
Absolutely. I mean, what I want to point out towards is the insurance players, as Neeraj was alluding to. You have Go Digit General as well, which is up 8.5%. Let's pull up a ICICI Lombard as well. And this is entirely in terms of the Supreme Court verdict, where there are multiple positives that are coming in for motor insurance companies. And a couple of brokerages are also indicating that this will lead to higher investment leverage and float income, driving 2 to 5% higher PAT for Go Digit and ICICI Lombard. So both of these counters that are in focus, where Go Digit is going to be the larger beneficiary out of this. Apart from these names, what's really moving in the markets, you have, I mean, LIC seeming absolutely flat right now. Happiest Mind is seeing some good moves. PNB Housing is what is looking good as well. Oil India is down in trade. In fact, let's go across to Ajit Mishra as well. Ajit, with the way markets have opened right now, what would the key levels or your top picks be at this hour now?
So after this, recent move in the index, we believe that the consolidation that we were seeing from last, couple of months, that is over now. Means we are still not decisively, holding about 24,600 mark, but broadly, the way we are maintaining up the long-term averages, this indicates that the consolidation phase is over, and 25,200 is something that the market is heading towards too. So with stop at 24,400, one can continue with buy on dips approach when it comes to the index. Banking is also largely aligned, means barring FMCG, all these sectors are participating in the move. So for banking, it's 57,300, 400 zone where we see the support, and 58,800 is something that we are eyeing the target zone. So the risk reward is favorable for both the indices. Now coming to the overall structural positioning on the stock specific front, as you rightly mentioned that broader markets are doing relatively well. So we have Indian Hotel, which is trading in a very tight band, and indications are now in the favor that we could see a fresh up move. So here with small stop at 735, one can look for fresh long position in Indian Hotel, and 780.85 is what we are eyeing at the target area. And then we have Shriram Finance, which is currently hovering around its record high zone. So it's a retest of the record high. So consolidation might happen, but broadly the tone looks very positive. So accumulation in the range of 1,080 to 1,100 with stop at 1,040 and positional target of 1,200 plus.
We've done things in reverse, Ajit, this morning, but since now we've had the benchmark open for some few minutes now, what is the index strategy that you would suggest for the benchmark Nifty 50? And let me throw in also the Bank Nifty.
Yeah, so Alex, like what we have recommended, that the broader tone looks positive, means the pace of advance might not be the same, which we usually used to see, once we see a breakout. But broadly, the tone looks positive. So 25,000 is what we are eyeing in next. So accumulation or buying on dips is something that you should continue with. 24,400 now being the base. So the risk reward is favorable when it comes to the index. Banking also largely trading in tandem with the trend. So 58,000 is definitely an immediate hurdle, but broadly indications are in the favor of 58,800 to be retested soon. So here with stop at 57,400, one can accumulate or go long in banking index as well.
Okay. Some interesting moves, as we said, and ignore the percentage moves on the Nifty and the Sensex. Look at the levels for the next few days until this whole cash system stabilizes. MCX is 3.5% lower. Marico is 3.5% lower, so keep that in mind. I think Alex pointed it out. And there's a bit of a cool off. I think the other trend that we're seeing is that stocks in which the market suspects that the results are seasonal are seeing a cool off from the highs. You saw that in G Shipping yesterday when the stock had started off very high and then came off. You're seeing that in Deepak Nitrite today, wherein the stock started off about 7 or 8% higher on a blistering set of numbers. It's come off a little bit, is now up about 4%. But it's a stock that's shown some trend. Not quite able to break 1800 maybe, Kush Bora. Opening thoughts and a call on Deepak Nitrite.
Let's start with Deepak Nitrite. Like I said before, it opened. 4 साल से कुछ return नहीं बना है. I don't really like that kind of a move on a stock, right? So this is more of a momentum play from a very near-term perspective. And we said, positionally मत hold करो, profit book कर लेना. By the way, to add to your list, look at Bharti Airtel. The opening was at 30, 31, and then you're already seeing that dip. So I think you rightly identified that. It's becoming a trend where the factoring happens. The result factoring happens early. Before or as a lead up to the result itself. Now coming to the Nifty views. You know what? For the next few sessions until this settles, I think you should ignore the, as you rightly said, percentage move. In fact, I would suggest go a step ahead in your watch lists. Add Nifty futures and Bank Nifty futures. Right now, they are a true indicator of what the Nifty level or Nifty gain is. Now, while Nifty is looking flat with a very modest gain of 9 points, Bank Nifty futures is actually showing you the true picture, which is actually 0.5% higher, 0.06% higher. If you combine that with what's happening in the broader markets, right, the breadth is very positive. That's the kind of true picture of what's really happening in the market. I could also suggest, tracking the synthetic futures on Nifty, but I think the Nifty futures way is the Nifty futures is an easier way to go about it. So just add Nifty futures and Bank Nifty futures to your watch list, and for the next few sessions, track that to get a true picture of how the Nifty is actually behaving or reacting. Just to reiterate the view, still positive. We've had a decent up move on the Nifty, but I think 24,800, 25,000 on the Nifty very much on the cards. And because the opening is not about those 200 points up, you could still go long. Place your stop loss not at about 24,400 now, bump it up. 24,500 is your stop loss. That's the support zone that you should look for on the Nifty.
Okay. Parag bhai, Airtel doesn't have an uptrend. It has come off from the eyes of the day. No, just kidding. But Parag bhai,
that's why I said I'll not buy at a higher price.
Yeah. Which is a great call there. Parag bhai, but some of these chemical names. And now one is that that almost all of these will be seasonal, etc. But the companies are utilizing cash flows for doing backward integration. We've seen that with 2 or 3 other firms. We're seeing that in an announcement of Deepak as well today, where they are moving into the backward integration of phenol. Because these stocks haven't done too much and the earnings and the gross blocks have moved up, is it a good time to look at the chemical sector?
Might be. I'm not too confident about chemical call because in some cases there are inventory gains also.
Agreed.
We have to actually see chemical by chemical that where China is dumping, where China is not dumping, and take the call that way, because it is like pharma, right? You have to do bottom up.
So it is not in this circle of competitiveness.
No, what I'm trying to say is, no, see, one should widen the circle of competence, right? So I'm trying to widen it, but the point is that in some of the results I saw, it was inventory gain. And that's why stocks also cooled off after showing very good results.
Right, in terms of, okay, so Deepak Nitrite is what you're talking about as well right now. But motor insurance reforms, where the Supreme Court directions have come in, and they are mandating third-party insurance period extended for new vehicles, and this will be new cars that will be getting 4 years of third-party insurance up from current 3 years. New two-wheelers to get 6 years of third-party insurance up from 5 years as well. Now, the Supreme Court is proposing pilot project to link fuel purchases with valid motor insurance as well, and uninsured vehicles may be denied fuel under the pilot project. Now, basis this, you have two brokerages which have come out with their reports. Jefferies is saying that there are multiple positives for motor insurance from the Supreme Court verdict, and this will lead to higher investment leverage and float income, driving almost 2 to 5% higher PAT for Go Digit and ICICI Lombard. In fact, Go Digit being a larger beneficiary. Apart from that, what they are saying, you have a UBS as well, and they have a note on ICICI Lombard where they are saying that the Supreme Court ruling provides a positive sentiment catalyst, and it mandates longer motor third-party cover as well. So again, two positive notes coming in on both these names. Parag bhai, any view when it comes to these insurance names, specifically from a motor vehicle perspective?
Yeah, so it is a minor benefit, and Go Digit and ICICI Lombard are the beneficiaries. ICICI Lombard has fallen significantly after this result. So it might be a good tactical 10-15% play.
Okay, and specifically the challenge that is being posed by new digital players in the space, and the fact that they're circumventing the dealers that have traditionally sold motor insurance. It's a big challenge in motor insurance,
yes,
more than any other insurance,
yes,
right?
Yes.
So therefore, would you be wary of that?
So basically I'm not buying into this theme of general insurance. I'll stick to LIC right
You stick to LIC. All right.
What is LIC, by the way, today? It's flat. Still have the chance to buy. Okay.
Still have a chance to buy after the 8% downtick yesterday. Let's talk about Godrej Properties when we're talking about numbers, and let's bring in Mahima, who's joining in to tell you about what stood out with the numbers. And their stock is up and about. It's up as much as 4%. Mahima?
Right, so overall, if you take a look at how Q1 has panned out for Godrej Properties, all in all, it was a decent performance. But I think what's, making the stock run that 4% mark that we're seeing on the screen is largely on account of the operational metrics, which have done very well. Overall, even business development launches, remain very healthy, and collections have also risen. If we talk about the operational metrics, pre-sales has gone up by 22%. The FY27 guidance is at 39,000 crore. Collection has also gone up by around 18%, and the guidance here is of around 24,000 crore for the entire FY27. In terms of launches, they launched projects worth 10,500 crore GDV in just Q1. So all of that looking very healthy.
Okay. Thank you so much for that, Mahima, for setting the context up. And before we go to the management to discuss more, thank you, Parag bhai, thank you, Kush, and thank you, Ajit, as well, for joining in. I mean, it's always good to get the views. And the highlight today, as Kush would mention, is Parag bhai's Nifty target of what he's actually watching out for. So that's with regards to where. A thank you goes to all our guests as well. But Godrej Properties, let's pull up that one on the screens. Why this one is interesting is because there is a huge divergence that we're seeing in terms of the sales collection versus the profitability as well, because at EBITDA level, they've still not broken even in a couple of the projects. Gaurav Pandey, MD and CEO at Godrej Properties, joins in. Gaurav, welcome to the show, and always a pleasure to speak to you. We've seen that divergence which has come in as well in terms of the way numbers have looked like. But let's start with your collections. 18% growth, which is healthy. You've entered the year with close to 1,500 crores in pending land payments, and this is for older deals. Given the EBITDA loss that you have in this quarter, is your current cash generation strong enough to actually fund your new land acquisitions without significantly spiking your net debt?
I think the two ways you fund land acquisition. One is through generating good cash flows and creating operating cash flows to fund acquisition. And second is the debt headroom that you may want to use to drive growth. I think we're strong on both the perspectives. We've given a guidance of 24,000 crores of collections, and give or take, that will lead to close to 9,000 plus crores of operating cash flow within the year, if we, of course, ensure that the construction spends are happening on time and projects are completing well on time within the year in terms of different collectible milestones. So that's one bucket that will fuel growth. And the second is, we've set a upper limit of net debt ceiling of 10,000 crores, which would mean, give or take, net debt to equity of about 0.54 or 0.55. But still, we have a strong opportunity of almost using 3,500 crores if we want to fuel growth. But you basically look at growth as a lever only if you feel opportunities are as exciting for every return, for every money that you invest. So at the moment, there's no compulsion to drive acquisitions per se. But yeah, I mean, we do continue to see great opportunities and we buy, but within these guardrails that we set for ourselves.
Okay, so that's the guardrails that you've set for yourself. But if you're talking about a couple of the projects which have to beat recognition as well, when do you expect that recognition mix to actually turn EBITDA positive?
I think here you have to understand, like I was explaining some time back, on how the accounting process works. And in this year, we've also given our very strong indication of how the revenue recognition could look like. So to give you a sense, in FY25 and 26, the revenue recognition that happened on a P&L side was through a booking value of give or take 15,000 crores, where our economic interest in those booking value was about 74%. In this financial, which is FY26 and 27, the P&L will recognize a revenue of approximately 40,000 crores of revenue, which is where we have an economic interest in those projects in the range of 85 to 90%. So you can clearly estimate that the entire uplift of EBITDA to PAT is going to be quite explosive. And that is something we'll see in the next 15 to 24 months sort of a period, which we've entered now.
Okay. And if you have to talk about the success as well right now, or not only for Godrej, for other companies as well, high ticket premium luxury housing in regions like NCR is something which is really working. So are you seeing any signs of buyer fatigue or oversupply now in the luxury segment?
I think first of all, there is demand play across different cities that works with different, reasons why a demand flies up, and which is something like a product market fit. To give you a sense, the market is overall looking very strong, with the exception of Gurgaon. Most cities in Q1 have seen a total volume, talking about market aggregate level, at about sales as about 10 to 25% growth, which is one of the highest numbers that you can see from a market perspective. Gurgaon has seen a marginal slowdown in Q1 purely because the supply has come less, and Q2 we'll see a lot of supply, and I won't be surprised that Gurgaon will see a good comeback from a overall absorption perspective. And again, there are different degrees of performance. So markets like Bangalore and Noida and Hyderabad are clearly doing extraordinarily well, and certain micro markets of Mumbai like South Bombay, western suburbs, and Thane is doing very well. And then there are different markets and different maturity cycle, different stages of maturity which are behaving different ways. So again, it is very contextual, but yeah, I mean, fair to say that the market environment is slightly more positive as we enter this year than what it was, say, 12 to 24 months back. But yeah, I mean, one has to, of course, ensure that there's good product market fit. As far as the question of luxury goes, luxury is also a very widely and misused term. Luxury is also very relative in a particular geography. I would say there is demand across segments from mid-market to premium to luxury. And I think there are developers who are focusing on different segments in different micro markets. So if you're doing something in Worli, like for us, we do have a real luxury project in Worli or Golf Course Road. But there are many micro markets where we are focused, and consciously mostly in premium plus particular category. So there is great demand in luxury, but there is probably stronger demand where the bulk of India's population wealth aggregation is happening, which is the premium and premium plus segment, as we linguistically call. But it is unfair to say that there is lack of demand in one particular segment over other. I think it's mostly a micro market specific question and a developer strategy about it.
Okay, so basically that's from a demand perspective. In terms of the impact of the West Asia crisis, the geopolitical concerns, which you've mentioned in the past as well, that you're watching it pretty closely, are you seeing any sentiment impact right now in terms of business, or are there concerns on the supply chain side as well?
I think when the conflict started, I would say last 2 weeks of March, there was a sentiment drop through Middle East-led NRI sales, as they call it. But that sort of got very normalized by April per se. And today, if you ask me, Middle East specific customers are structurally looking at very, very differently. I mean, the closest parallel I can think of is more like COVID, when people started buying houses more for psychological needs than financial investment product per se. I think it's very similar in Middle East that, say, a large section of NRIs were looking either for long-term stay for themselves when they retire or mostly investments. I think that thesis is now getting drifted more towards looking at coming back to India or not. I think there's a structural shift we might see in Middle East, but still very early to really sort of comment. On the supply side, there were, of course, disruptions, I would say, across sectors, but things started normalizing, say, about June and July. In fact, in prices for, say, products like steel have actually come down to February levels, and in fact reduced to February levels. But yet there's some products which saw supply shortages in tiles and marbles. But again, that supply side constraint has also got resolved between later part of June and July. It's been more or less normal. So I would say, yeah, I mean, there were some disruptions in April and May. And there is some amount of cost increase in certain products, but they have started seeing a reversal trend already, and supply side disruptions have minimized now.
Okay, so disruptions have minimized. Now, my other question to you is in terms of whatever disruptions that have come in on the supply side, I'm sure that's had a bearing in terms of pricing or in terms of costs. Are there any plans to take price hikes that could be on the annual, or do you think whatever increase that you've seen is something that is manageable?
I mean, price is very demand-led, and it is a good way to hedge the cost. I mean, to give you a rule of thumb, if theoretically, if the cost base were to be like this for the longest time and the conflict were not to resolve, I mean, we've done an assessment, it kind of eats away just 0.1% of profit margin per quarter. And I mean, even if it continues for maybe 6 or 8 quarters, it is not more than, in current context, not more than 1%, which easily can be managed. But of course, in some projects, you can do it because there is strong demand, and some projects you cannot do if it's very price sensitive product category. I think our pricing strategy is not just driven because of this constraint. I think wherever we see there are good opportunities to increase pricing, we've done that very consistently. But where we don't see, just because to manage a 0.1% margin potential risk, you don't take a knee-jerk reaction. You assess the demand environment and then take a call. So it's going to be a very project-specific call, but I don't see this as a very material risk at the moment. But yes, if the crisis continues, it's all rates go to like $200, I mean, then we're talking a very different problem altogether, which I see hopefully happening right now.
Okay. So my last question then to you is, in terms of the targets that you have for regards to pre-sales, the ROEs, with the velocity of growth that you're seeing, does anything change?
I mean, not really. I mean, it's too early to make a projections of what can happen next 18-24 months. I think we'll take one step at a time to project for FY28. But I think for this year, for sure, we are very driven towards delivering upon what we've given as a guidance. There is some amount of upside risk, but I think we've just done Q1 with a 22% growth against what we would have given as a guidance for the year. But I would still like to see 1 quarter time, and hopefully we would. Our endeavor, of course, is to beat the guidance and over-deliver. But I mean, it's too hasty to reassess whether we want to give a specific number. But yes, there is some upside risk.
All right. So there could be a potential upside risk, and that's the key that you should be watching out for. But thank you so much for joining in. Always a pleasure to speak to you, Gaurav, and looking forward for many such conversations going forward. The stock, Neeraj, at the day's highest levels, 4.5% up move coming in there. But we'll quickly, in fact, go to the next one, which is Castrol India. Let's pull up that one on the screens and see what a Castrol is doing in trade. 3.5% up move coming in there. Puneet joins us to tell us what has really worked for a Castrol India this time around. Puneet, what are you picking up?
Well, thank you for that. Well, it's a good quarter for the company. Revenue is up 21%, and result margins maintained at the 26.4% versus 21.4% on a quarter-on-quarter basis. So despite the volatility, especially that we've seen on the crude oil side, margins continue to be maintained. They will also, of course, pay an interim dividend of 6.25. But it's important, and we'll be speaking to the management today at 11:15 to understand the volume growth picture of the company. Now, it's clear Gulf Oil reported a 17% volume growth. So they will be letting us, they will of course mention about this in the conversation, but important to get in that perspective as well as what to expect on margins, because in a quarter where there has been a lot of volatility, despite that, if the margins are continued to be through, could this be replicated over the next couple of quarters will be something to watch. But a very good quarter for the company. It'll be important to mention the volume growth number, and that'll be something that we'll be watching out for.
Okay, so that's with regards to where Castrol India goes. But moving on, Cummins India is another one that you should be watching out for in trade today. They will be reporting their numbers as well. The stock is at the day's highest levels ahead of the numbers. Now, what you should be looking out for? First up, Q4, it is a hyperscaler delivery that is unlikely to recover what we saw. I mean, what we saw in the first quarter is unlikely to be delivered in the first quarter of FY27. The power generation demand is what has been driven by data centers. Railways mining recovery is going to be boosting industrial demand as well. The commodity inflation could potentially weigh in on the margins, and West Asia disruptions could hurt export growth. The revenue number is seen at around 3,200 odd crores, EBITDA at around 674 odd crores, which is up around 8%. Margins are at 21% as well. But before we continue with this one, those are live visuals that are picking up. But the RBI governor is just walking in right now, and we're just probably, 15 to 20 minutes away from this speech. I think the key, Neeraj and Alex, is going to be, yes, earnings is important, but the commentary when it comes to the monetary policy is what we're watching out for. The status quo is what the majority is saying.
Yeah, I would guess that's the safest assumption to do. Let's see if there is any surprise out there or no. But the key question will be that whether that surprise comes with a surprise commentary, or is it, how do I say, status quo with maybe a surprise in the commentary. I think that those are possibly the two outcomes that you talk about, if you will. Okay, what we're getting ready for the policy, what we do is take a break, come back, full tilt towards the MPC decision and the commentary. Stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
POK के फायरिंग रेंज में खड़े हैं.
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं. Is it fire?
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from facts and explain why listening better could mean living better. Only on NDTV Profit.
Welcome to the policy coverage on NDTV Profit, and the next 45 minutes we'll preempt what the meaning of some of the moves could be, get you the policy statement and the governor's speech, of course, and then, of course, dissect the policy for the subsequent 30 minutes. Remember that the pre-policy poll, almost everybody said that the MPC is likely to hold the repo rate steady at about 5.25% and may continue with the neutral stance as well. And guys, while there is this West Asia conflict uncertainty, so on and so forth, it shouldn't surprise too many people if that is indeed the stance, because globally as well, you're not seeing too much of a strong reaction, if you will, to the conflict-related developments that have happened. So this is probably par for the course.
It is, and very interesting to note, Neeraj and Hiral, that in the recent past, you've seen treasury yields in the US come off from those elevated levels as well. And I think we spoke about it a couple of weeks back, where that 4.7% mark and that 5.2% mark for the 30-year in the US is something to watch very closely. And the easing out of geopolitical tension, the fall in crude oil prices, all of those have meant that yields across the board have cooled off, and from India's perspective as well, there's certainly something to bear in mind. Remember that the RBI is projecting for the full year FY27 crude oil at $95 to the barrel, and so it'll be interesting to find out whether they've adjusted that at all. It's unlikely that they will. There could, of course, be a change in their inflation projection in the full year based on what you saw in the first quarter, because it came in slightly lower than expected. Jayesh Mehta, Vice Chairman and Chief Executive Officer, bless you, Neeraj, of DSP Finance, and Upasana Chachra, Chief India Economist at Morgan Stanley, joining us just ahead of the policy. Good morning to the both of you. Upasana, I'll come to you first. I'm guessing you're assuming, or your base assumption is that there will be a status quo. But beyond that, is there anything else that you will look for in the commentary that will give you a sense of what to expect in the rest of FY27?
Yeah, thanks. Good morning. So yes, our view, I think, as is with the consensus, is for a status quo on rates and pretty much status quo across the board in terms of stance. And I think also in terms of growth inflation numbers, I don't really think they will be tweaking it this time around. Though incoming data on growth has been actually pretty solid, and if anything, then growth has to be revised upwards. And on inflation also, tracking numbers are below where RBI was tracking, say, for the past quarter. So again, if anything, there is a downward bias towards inflation. But given at the margin the uncertainties that still prevail from both the Iran conflict and the uncertainty from the ongoing monsoon season, I think it's probably likely that RBI maintains these numbers. I think from a forward outlook perspective, of course, policy guidance will be important. And I think in this, we will be watching out for the tone of the policy. How neutral is the pause, or is there any bias towards indicating a change in stance or policy rates moving up higher over the course of the year? And how does RBI view the incoming data in terms of, the strength of the economy? Does that, in their view, sustain or not? And also from an inflation perspective, how, where are the bias towards the risk? Is it still towards the upside? Because I think these are the finer nuances that will be important to assess which way policy rate trajectory can be in the next couple of meetings. And apart from this, I think any mention around liquidity management, especially given the inflows on the capital flows side that we are seeing from the RBI measures and the windows that it has opened up, I think that, again, I don't think there will be a decisive roadmap right now that will be laid out, but yes, watching out for any commentary on liquidity management.
Thank you, Upasana, for that. Let me get in Jayesh Mehta as well. Jayesh, good morning. Taking cues from what Upasana is indicating right now, what's the bigger risk today if you had to look at it? Would it be inflation forcing the RBI's hands, or would you look at growth slowing because the policy stays tight for pretty long?
So I think both inflation definitely looks downward trajectory, but even if you, as Upasana said, maybe they will not change it right now at this juncture. They will maintain the same inflation roadmap which they had mentioned last time. And from that perspective, I think, of course, very clearly status quo this policy, and in fact, I would say the whole of FY27. In terms of growth, yes, the growth has been better than expected. but second quarter is kind of, people are expecting some lower down. So maybe not this policy, but they may revise it up if required in the next policy if the things does not get global things does not get worsened from here. But at this juncture, it looks pretty good. But that is, as I said, like this juncture, and like the way the geopoliticals are moving, I think every day is a new change. But yeah, as of today, even if there was some mildly, even if we were in last week where it was slightly different scenario, I would not expect RBI to hike rate. And in past also we have seen, whenever it is something to do with global kind of situation, we don't really make the rate changes here. So from that perspective, I do expect status quo. In terms of, I think most of the indication would be the same. Maybe I would love to see, I don't know whether they will, or maybe post press conference, something on the FX side. With there's so much of inflow coming in, more than expected inflow coming in before September, and maybe we'll end up maybe at 70, 80, 90, $100 billion. Currency still not appreciating. That's a little bit challenging.
Jayesh, in fact, that is exactly what I want to ask you about. To say that, and there was one view that was expressed that I saw from a prominent voice in the mutual fund space that had to do about exactly what you mentioned, to say that $80-90 billion based on the trajectory we've seen seems to be par for the course. So could there be a step in by the Reserve Bank to say that we'll close the window earlier than anticipated? Because ultimately if you get too much also, it's a problem that you'll have to face down the road. So do you anticipate that, one? And two, liquidity management, because with these flows you're going to have a significant surplus durable liquidity through the year, so they'll have to manage it. How do you expect them to do that?
So I think in terms of liquidity, looking at where the bond yields are, they won't really check out liquidity. Maybe that is the situation they may do. In between also, if you look at it, when we had too much of surplus security, as we are talking about long-term repos, and I think they will manage it through long-term repos. When the bond yields are so much away from the repo rate, there is no point RBI doing a OMO sale, right? It would actually spoof the bond yield and the market. So from that perspective, I think it's manageable. Like if you do long-term repo, it is manageable. They may suck it out for some time. In terms of closing window, I don't really see. I think maybe that 70-80 was anyway expected. That may become 100 billion. It does not really matter if we, at this juncture, our currency has suffered a lot. So to that extent, if we get a respite for 3 years, that would be well managed.
Okay. Upasana, your initial mentions had 2 points which stood out for me. One, of course, is this growth revision upwards. And we know that at least on the earnings side, when we look at the markets and the kind of results that Q1 has shown, it does seem that the earnings are holding out well. Is per se high frequency indicators indicating that growth overall, even in the unlisted space or otherwise, is also looking strong?
Yes, so I think the whole theme since the Iran conflict broke out has been that each month high frequency data has actually been coming up better than anticipated. And I think, and that's pretty much across the board. So I think each month starting April, May, June, we've been writing that data is actually better than anticipated. And if you look at the breadth of the indicators, it is improving or has been holding up on its strength across a number of indicators. So one is the obvious auto sales, where you have again strength across PVs, two-wheelers, tractors. Second is GST collections, like the last data point is double-digit 14-15% growth. And even if you deflate it by the deflator, you will still end up with high single-digit growth, and even 2-year CAGR numbers are double-digit. So there is pretty solid strength there. If you look at bank credit, that's again going up, and I know it's 17-18%, but that's nominal. But again, the same logic, if you were to do it deflated by the GDP deflator or look at it on a 2-year CAGR basis, there is still an accelerating trend across both these indicators, and pretty solid trend. the mix of credit growth is also good in my view this time, because it's not just lopsided towards retail. You are seeing pickup in corporate credit as well. And again, corporate credit across large, medium and MSME industries. And lastly, I think which has been another surprise is the strength in the goods export data point. So again, goods export, and not just headline exports, but even non-oil exports or non-oil, non-electronic exports have been accelerating in the last 3 months against the specter of, this Middle East tensions and overall concern on how external demand will hold up. So I think GDP growth, like for the June quarter, I think will be tracking around 7% in our view. That's higher than what we were anticipating, and therefore for our numbers for fiscal 27 at 6.7, I think we still see some modest upside risk, notwithstanding these concerns from either the monsoon or uncertainty from oil prices.
So, Upasana, that's with regards to growth that you're looking at. How are you looking at liquidity management as well? Do you think that as a point of focus is becoming more important versus what the RBI does in terms of rates? And what signals should investors actually watch out for when you talk about the liquidity conditions, bond deals, and the credit growth that you're talking about as well after this policy?
Yeah, sure. So I think on liquidity, I think as Jayesh mentioned as well, I think RBI should probably use, or the first line of defense should be using sort of temporary measures, right, like longer term repo. So I think I'll concur with him on that. We will see a in sort of bloating of liquidity surplus for starting August, September, and probably up to the year end. But this will even out as we probably see for up to fiscal 27, because there will be normal or usual drains on liquidity. The country is running a current account deficit. So overall, we need to see how high is the overall balance of payment surplus to assess the liquidity that may still sustain in the system. So I think as a first line of defense, looking at more temporary measures like longer term VRRs, which should help RBI manage liquidity between the September to December sort of window and time period. Having said that, I think because there is excess liquidity which will be there in the system for this quarter, financial conditions in my view will ease. So if you think from a market yields, market rates perspective, there will be some amount of downward bias, at least for from here to up to the year end, not hopefully having any other external risks coming into the picture, but just from a capital flow perspective, I think this easing financial conditions will probably be another theme at the margin that could play out. And I think given where growth inflation is, RBI should be comfortable, given its neutral stance, to have a little bit of a surplus liquidity and manage it with VRRs and have minor easing in financial conditions.
Yeah, it's an important point. And by the way, what you were just seeing on your screen, the 10-year benchmark government bond as things stand, the yields are just a tad bit off yesterday's close at 6.78% or thereabouts. You'll have to watch that very closely, because money market reactions could be something that could come through on the basis of the commentary. And the USD INR, the Indian rupee, is appreciating just a tad bit. In fact, more than a tad bit, 40 paise or thereabouts at this moment, and above the 95 mark.
Morning.
Let's listen in.
And namaskar. The West Asia conflict continues to challenge the global economy by disrupting key trade routes and supply chains, amplifying market volatility, and repressing business sentiments. Trade uncertainty lingers as US imposed fresh tariffs. The global economic environment has become increasingly unstable. Global growth is projected to soften, while inflation forecast is higher for 2026 vis-a-vis the previous year 2025. Some central banks have tightened policy, others remain vigilant. Crude oil prices, currencies, and financial markets remain volatile, fluctuating in line with the changing intensity and the uncertainties of the West Asia conflict. In this backdrop, the Monetary Policy Committee met for its third bi-monthly meeting of this financial year on 3rd, 4th and 5th, that is today, to deliberate and decide on the policy repo rate. After a detailed assessment of the evolving macroeconomic and financial developments, as well as the outlook, the MPC decided unanimously to keep the policy repo rate unchanged at 5.25%. Consequently, the SDF rate shall remain unchanged at 5% and the MSF rate and the bank rate at 5.5%. The MPC also decided to continue with the neutral stance. I shall now briefly set out the rationale for these decisions. The MPC noted that headline inflation has edged up above target as expected. The realized inflation for Q1, however, remained marginally lower than projections, reflecting limited pass-through of cost pressures. The higher inflation is mostly on account of fuel and food, with little signs of generalization of price pressures so far. Core inflation, excluding precious metals, continues to be benign. As projected earlier, headline inflation is expected to rise further in the near term. It is expected to peak in Q3 of this year, primarily again due to food and fuel, and thereafter moderate. The underlying inflation reflected by core inflation excluding precious metals, which has been benign for some time, is set to align with core inflation towards the end of the financial year. Growth continues to be supported by the resilient domestic demand, sustained expansion in manufacturing and services activity, and robust exports. It reaffirms India's position as the world's fastest growing major economy. To sum up, the MPC noted that even though headline inflation is projected to increase, it is primarily on account of supply side pressures caused by food and fuel. It is not getting broad-based. Core inflation continues to remain moderate, and it is expected to decline after peaking in Q3. Growth, albeit resilient, is expected to be lower in this financial year. The outlook, however, is hazy because of the uncertainties regarding southwest monsoon, El Nino, geopolitics, and global trade policy. There is a need for greater clarity to emerge, especially regarding inflation, its path and composition, before taking any policy action. Any such action would also have to consider the need for recalibration of policy rates in line with the evolving growth inflation dynamics, especially the normalization of the underlying inflation from its benign levels seen hitherto. Considering all these factors, the MPC voted to keep the policy repo rate unchanged. The MPC also decided to retain the neutral stance to respond appropriately to macroeconomic developments. The MPC underscored that it will maintain a close vigil and remain resolute in its commitment to align inflation with the target. I will now come to our assessment of growth and inflation. Let me first of all talk about growth. The supply side pressures caused by the West Asia conflict have eased somewhat since June 2026, leading to withdrawal of temporary measures undertaken by the government and normalization of key input supplies. However, the re-escalation of the conflict since the first week of July has amplified volatility in energy prices and renewed uncertainty about supply chains. Amidst persistent global uncertainty, domestic economic activity has exhibited resilience as reflected by the high-frequency indicators available for Q1. Early results of corporates for Q1 indicate healthy performance in the manufacturing sector. This is also corroborated by an expansionary PMI. Services activity too maintained its momentum in the wake of strong domestic demand. Private consumption continued to be driven by buoyant discretionary spending. Investment activity remains steady on the back of robust government spending on infrastructure and construction. Merchandise exports rebounded with double-digit growth. Services exports growth sustained its momentum. Overall, the Indian economy performed better than expected in Q1. Looking ahead, the prospects for agriculture are clouded by deficient and uneven southwest monsoons amidst El Nino conditions. The reservoir levels, which remain close to normal, bode well. The government's initiatives for crop diversification, including short duration as well as climate resilient crops, and water harvesting and conservation inter alia are expected to mitigate the impact of deficient rainfall. Although manufacturing sector may face cost pressures, the growing diversification of global supply chains should help mitigate the impact. Services sector is expected to maintain its buoyancy on the back of strong domestic demand. On the demand side, impact of weak monsoon on rural consumption may be partly offset by supportive allied sector activities and various government schemes. Buoyancy in services sector and steady employment conditions should support urban consumption. Strong capacity utilization, robust credit flow, and the government's continued thrust on infrastructure are expected to sustain investment activity. Net external demand is expected to derive strength from bilateral trade agreements, many of which have been recently concluded, and some of which are now being operationalized, as well as the market diversification efforts of our manufacturers. Renewed tensions in West Asia, which are disruptive of global supply chains, volatility in international financial markets, and weather-related shocks, however, pose downside risks to growth. Taking all these factors into consideration, real GDP growth for this year is now projected at 6.7%. This is 10 basis points higher than our previous projections. Q1 at 7%, Q2 at 6.4%, Q3 at 6.5%, and Q4 at 6.8%. The risks are evenly divided. Let me now talk about inflation. While CPI inflation increased to 4.4% in June after remaining below target for 16 consecutive months, it turned out to be lower by 30 basis points than what was our earlier projections. The increase in June was primarily due to higher food, fuel, and fuel-induced inflation in select categories such as restaurant services. Notwithstanding the pressure from higher input costs, core inflation, which excludes food and fuel, remain unchanged at 3.9% in May and June. Core inflation, excluding precious metals, was even lower, 2.3 to 2.5% during this period. Going forward, El Nino impact on temporal and spatial rainfall distribution continues to remain a major risk, although proactive supply management and adequate stock of food grains should provide comfort. Global oil prices have remained highly volatile, with sharp two-way movements triggered by geopolitical developments. This blurs the near-term outlook. Although generalized inflation pressures continue to remain modest so far, the risks of second-round impact of higher food, fuel, and other input prices translating to broad-based inflation persist. After considering all factors, CPI inflation for this year is now projected to be 5%, 10 basis lower than our earlier projections, with Q2 at 4.7, Q3 at 5.9, and Q4 at 5.5%. Inflation for Q1 is projected at 5.3%, with risks being evenly balanced. Core inflation is projected at 4.3% for this financial year. Core inflation, excluding precious metals, is projected to be lower than core, although it is likely to align with core inflation towards the end of the financial year. Let me now talk about liquidity and financial market conditions. System liquidity, as measured by the net position under the LAF, the Liquidity Adjustment Facility, stood at an average daily surplus of 1 lakh crore rupees since the last MPC meeting. Going ahead, the usual return of currency during the monsoon season, drawdown of government cash balances, and our special measures to attract capital inflows are expected to aid banking system liquidity in the near term. Since the June meeting, the Walker weighted average call rate traded within the policy corridor. It averaged 5.31%. Short-term money market rates, especially rates of commercial papers and certificates of deposit, moderated in July. GSEC yields, buoyed by measures undertaken by the government and the Reserve Bank to attract foreign capital into Indian debt markets, eased across maturities during June and July. Transmission in the credit market, however, moderated slightly during May and June, with hardening of deposit and lending rates. Nevertheless, credit growth continues to remain robust and broad-based across various sectors. Through its conduct of two-way operations, the Reserve Bank will proactively ensure sufficient liquidity in the banking system, guided by the objective of aligning the Walker to the policy repo rate. I will now speak about financial stability. As mentioned earlier, the system-level financial parameters relating to capital adequacy, liquidity, asset quality, and profitability of the scheduled commercial banks continue to remain healthy. There is, however, some moderation in NIM as compared to last year. Similarly, the system-level parameters of NBFCs too are sound, with adequate capital position, improved gross NPAs, and higher profitability. Let me now turn to the external sector. Despite the challenging and turbulent global macroeconomic environment, India's current account deficit last year remained modest, much below the levels considered to be sustainable for emerging markets. During April to May this year, the current account recorded a surplus of $2.8 billion, primarily led by services trade and strong remittance receipts. In Q1, India's merchandise trade deficit widened to about $86 billion from about $69 billion in Q1 of last year. This is mainly driven by imports of crude oil, electronic goods, and gold. Going forward, moderation in global trade growth, surge in energy prices, and persistent trade policy uncertainties pose upside risks to India's current account deficit. On the other hand, implementation of the India-UK trade deal, along with many other recent agreements with major trading partners, healthy services exports, and buoyant inward remittances are expected to mitigate these risks. On the external financing side, gross FDI inflows were buoyant at $30.7 billion in the first quarter of this year. They are higher than $26.7 billion in the same period last year. This underscores the continued interest of global investors in India. Net FDI inflows also mainly driven by higher gross inflows and a slowdown in growth of outward FDI increased during the period. Moreover, FPI to India has seen a turnaround in June and July this year with net inflows of $7.1 billion US. This is, of course, primarily driven by the debt segment and after registering net outflows during April and May of this year. Going forward, capital flow measures undertaken in June will support inflows. As a result, the balance of payments is expected to register a healthy surplus. India's foreign exchange reserves continue to be adequate in terms of the standard metrics of reserve adequacy, with import cover of over 10 months and external debt cover of almost 91%. As for the exchange rate, as mentioned earlier, we will continue with our policy of it being determined by market forces, while at the same time curbing excessive volatility, checking speculative behavior, and preventing disorderly movements so as to ensure that it is not out of sync with the fundamentals or it is not disruptive of economic activity. For this purpose, we have a very broad range of effective regulatory and market-based instruments. Now, before I conclude, as has been the practice, I have a few additional measures also to announce. I have two measures to further strengthen the cooperative sector. One, on the basis of the feedback received on the discussion paper on licensing of UCBs, which we had done some time ago, we are now issuing draft guidelines for resuming licensing of the urban cooperative banks. Two, in light of the experience gained and the developments since 2008, when the credit monitoring arrangement for rural cooperative banks was last revised, we are issuing draft directions after undertaking a comprehensive review of this arrangement. There is one measure for interest rate on advances. In order to enhance transparency in lending rates and further strengthen consumer protection, it is proposed to harmonize and standardize the regulatory framework on interest rates on advances for all regulated entities. To conclude, global economic conditions and sentiments continue to remain hostage to the rapidly oscillating developments, both in scale and intensity, of the West Asia conflict. While these have impacted the domestic growth inflation outlook adversely, the stronger macroeconomic fundamentals of the Indian economy are helping navigate this global shock resolutely. As alluded to in my last statement, this presents an opportunity to accelerate measures to enhance our resilience to withstand such shocks. We shall continue to implement policies that further fortify our economy, whether it is facilitating sustainable growth or promoting consumer protection, whether it is preserving stability of prices, the financial system, or the currency. We will do whatever it takes to ensure the same. Thank you, Namaskar, and Jai Hind.
All right. Well, that's a word coming in from the RBI governor. And it could be said that this was along expected lines. Let's pull up the markets and see what's happening while we're at it. Some key factors for you to bear in mind if you're just tuning in. The policy rate has been kept unchanged. This was broadly expected. The MPC voted unanimously to do so. The other thing that's kept unchanged is the stance, and that has been retained at neutral. The few changes, if at all, are marginal changes to the projections for growth and inflation. The GDP growth forecast for FY27 is 10 basis points higher at this juncture at 6.7%, and the governor has pointed to the risks being evenly balanced. Inflation, CPI inflation in FY27 seen at 5%. This is 10 basis points lower than earlier forecast, and this is on account of the first quarter coming in lower than expected. It's expected to pick up in the third quarter, in fact peak in the third quarter. This is both headline inflation as well as core inflation at 5.5%, or actually 5.9% in the third quarter, and subsequently it's expected to come down to 5.5% in the fourth quarter and then 5.3% in the first quarter of the next financial year. Core inflation for the full year FY27 is seen at 4.3%. We've got former Deputy Governor of the Reserve Bank of India, R. Gandhi, joining us right now. I'm sure that Mr. Gandhi has listened to the speech as avidly as we have. Good morning to you, sir, and thanks so much for taking the time. Give us a sense of what you think the deliberations might have been like, as somebody who has been in that room with the kind of uncertainty that we're currently facing on the external front. The choice has been to maintain status quo. What do you have to say about that?
Thank you. Good morning, everybody. Yes, the announcement by the MPC is as expected, widely expected. Nobody, or rather very few, really expected any change in this, both in the repo rate and even on the funds. And the projections that has come forward now, that is presented by the governor, there are some changes between what has been projected in the last MPC meeting and today what has been projected. So obviously the discussion would have been around the changes which caused these changes in the projection. And in my opinion, the MPC would have noted that the core mandate of the Reserve Bank, that is relating to maintaining the inflation at the accepted level, that is where the entire discussion would have been around. The projected inflation compared to the previous one, actually it is less by 10 basis points, and projected growth is also higher by 10 basis points. And the core inflation is expected to hold across. So that is what might have influenced their entire decision for keeping the rates at the current rate and also not changing the terms.
Yeah, but I wonder what you made of on the growth commentary that the RBI has given, because one would have anticipated, and some people were estimating, that there will be fairly strong commentary on growth given the high frequency indicators and Q1 earnings as they've shaped up. That didn't quite shape up as the way the expectations were.
Of course, the high frequency indicators relate to the immediate prospects of growth, whereas growth projections relate to 1 year ahead. So there they have to factor in the current uncertainties in the scenario, both in the geopolitical and on the tariff and other fronts. That's why they have been cautious in terms of not making too many changes with reference to the projected growth rate. So growth is, as mentioned, the government mentioned also in the high speed, high frequency indicators that indicate the current scenario or the next
a bit of an issue with that line. Sir, we'll come back to you once the line is patched, but while we wait for that to happen, let's go across to our colleague Piyush, who is joining us from the RBI headquarters. Piyush, we've heard the statements. What else are you picking up?
Yeah, so broadly in line with our poll as well, the RBI has continued maintaining the repo at 5.25%, maintaining the neutral stance. We had also reported that there could be a tweak both on GDP and inflation front, and that is exactly what has happened. The RBI has hiked the FY27 GDP forecast by 10 odd basis point. Now it projects FY27 GDP to be at 6.7%. Inflation forecast has been trimmed by 10 basis point again to 5%. 5%, which is 10 bips lower than the earlier expectation. Now, West Asia conflict and its spillover effects on India's economy continues to be the major consideration that the MPC members gave in this particular meeting. Apart from that, on the liquidity front too, the governor said that durable liquidity will be provided. In fact, since last policy, the banking system liquidity has been in surplus of over 1 lakh crore rupees. He mentioned how the call rate has hovered around the repo rate. The short-term yields have gone down, and both the government bond yields have gone down. Other regulatory measures, as we reported earlier, the RBI will now issue licenses to urban cooperative bank. This is a move we have not seen over the last 2 decades, and it will also standardize the interest rate on advances. So all these are, these are the things that we are picking up now, and of course we will come back to you with updates when the governor, holds a press conference at 12 noon today.
Okay, thanks Piyush for that, and of course we'll wait for your questions at the press conference as well. Dr. Ashima Goel, ex-member of the MPC and RBI, joins in right now on the show as well. Dr. Goel, thank you so much for joining in. What did you make of the policy statement, because the actions were nearly in line with almost what anybody else predicted to? The statements might have a different opinion though.
Yes, I think it was very good to see an emphasis on headline approaching core towards the end of the year. That volatile commodity inflation need not persistently affect core inflation. And therefore, the hold is premised on inflation continuing to remain near the target in the long run. Also, I think the governor made it very clear that India's resilience and outperformance, that we need to, I think all of us should introspect on what it is that keeps the economy performing more than the general expectation. The third thing which I liked was the emphasis on doing whatever it takes to maintain financial stability, to prevent excess volatility of the exchange rate. And I think that should also indicate, and also the mention of acting against against deviation, large deviation from fundamental values, because I think the rupee is really largely extremely devalued at present compared to fundamentals.
Dr. Goel, good morning. This is Seeral here. My question to you is, if you have to look at the fine print as well, I mean, from what I'm reading into it, not really seeing too much concern when it comes to growth as well. However, the tonality in terms of inflation, that probably could potentially become the bigger challenge from here on, and that appears more cautious in terms of inflation versus your previous policy statements as well. Would you read into it in that fashion?
So I think as the MPC, whose primary objective is, or first objective is inflation, they have to emphasize that they are committed towards keeping inflation near the target within the tolerance band. And since I've written about this, that in the current situation where you have large commodity shocks still playing out and all kinds of global uncertainties, for the widespread consensus was really hold. But that hold has to be accompanied by strong language that we are committed to keeping inflation low, because that has a role in anchoring inflation expectations. It reassures markets that in case inflation rises persistently, the RBI will act as necessary. And that helps anchor inflation expectations. So I think the tilt in language is very welcome.
Yeah.
We saw that in the Fed policy, there was no mention of how higher inflation would be tackled, and that led to bond prices, bond yields rising.
Yep.
In India, I think they're softening.
Yeah, it is.
So
It is
shows
indeed.
the success of the communication.
Yeah, we're also joined this morning by Tanvi Gupta Jain, Chief India Economist of UBS Securities, and Nilesh Shah, Managing Director of Kotak Mahindra AMC, who's kindly accepted a call in the middle of his commute to work, I see. But Tanvi, I'll come to you. What do you think of the wording and of the tonality of the message of the RBI governor and the projections on both GDP as well as inflation?
To be very frank, last policy I thought they were quite cautious. It was a hawkish pause. This policy, I think they were quite balanced. I mean, 10 basis point higher GDP, 10 basis point lower inflation. I mean, there was not an urgent need to do it in this policy. I could have waited, looked at how the monsoons are, how the oil prices movement is, and could have waited for the October policy to make that change. But I think they wanted to signal that the demand in the economy is still strong, and that's why GDP growth going up from 6.6 to 6.7%. It was more a signaling that the demand, despite the external shock, despite the geopolitical conditions, and despite the stronger El Nino concerns, things are okay on the ground. And I think that signaling was a very important step. So I would find this policy more that wait and watch, very balanced. If you look at our forecast at UBS, we actually don't have a rate hike in our forecast for FY27. That is not to say that a 50 basis point rate hike is not possible, but right now, at least for the August and October policy, we are seeing rates on hold. But I would say I would take today's policy as a very balanced policy. Definitely didn't feel like very hawkish. GDP growth 6.7, exactly in line with UBS estimate. However, on the inflation front, even though the core inflation was in line with my estimate, but I have a headline CPI inflation of 4.8. RBI is now at 5. And we'll see how the food inflation shock is going to behave, because so far the crop sowing, decline, which was 21% the first week of July, has narrowed to 3%. So things are looking on the ground much better, despite the geopolitical and the weather-related disruptions.
Yeah. Nilesh bhai, thanks again for joining us while your commute, and Tanvi made a very important point, of course. Belated birthday wishes to you, Nilesh bhai. And I wonder if the statements that have come in around growth and around inflation per se are in line with what you would have thought, and what Tanvi said, that things on ground are looking a lot better than what the West Asia conflict might lead us to believe.
So Neeraj bhai, we are in a situation where past is looking very perfect. IIP numbers, inflation numbers, growth numbers, corporate earning, everything is coming ahead of expectation on a positive side. But the future continues to look little bit of tense because of monsoon, because of Middle Eastern situation. And RBI on inflation was ahead of market estimate. Now it has narrowed down the gap. And on growth side, I think market is still below RBI's estimate, but we'll have to see how situation shapes up in the monsoon season. So net, a very balanced policy. Past is perfect. Future is little bit tense.
Okay, so Nilesh bhai, good morning. Hiral here. So what is that single biggest message that markets should actually take away from today's policy, if you have to look from the equity side of it or even from the debt market side of it?
So for equity market, earnings growth have been supportive. The geopolitical challenge continues to remain. But most important thing is the IPO supply. The pipeline is huge side. For the debt market, I think it's a status quo policy. A lot will depend upon how government provides for 8th pay commission recommendation. It is effective 1st Jan 26. Will they provide in FY27? That's about 4 lakh.
No, so that's an important point. Look, so I think most of the point was made by Nilesh bhai about the liquidity situation, right? But let me ask Mr. R. Gandhi, who's back with us, about that very fact, which is that the governor has spoken about two-way operations being used, and this is the exact words that he used in his statement, to manage that liquidity situation, to ensure that there is sufficient liquidity. Mr. Gandhi, at this point, it's not a problem of sufficient, it's actually a problem of plenty. And so how is this going to be managed in your opinion?
Yeah, that's right. That's earlier also in your discussion, Jayesh did mention about that. When 80 billion or $100 billion come, and that would pump in further liquidity into the system, that would mean that Reserve Bank will have to absorb quite a bit of temporary liquidity from the system. So there will have to be measures. Obviously, they will. That's what he said, that in both ways we'll be operating, while supporting the rupee to curtail the volatility and keep the exchange rate stable. And along with that, that would mean that both it may have to pump in dollars and it may have to purchase dollars also from the market when it comes through. And when the liquidity is very surplus beyond the requirement, then obviously Reserve Bank will have to absorb that through various means, because it has got various tools under its kitty to apply that. And we also have to remember that this year the deposit growth has been lagging behind the credit growth. Credit growth has been very robust, and the banks would need liquidity also to, because come October and onwards, the credit offtake usually will be much higher. That means that banks will need liquidity. So that way, it will be possible for Reserve Bank to manage the liquidity requirements, both for to support the credit growth and also to support the to maintain foreign exchange rates at a stable level. So it will have to be operative on both the markets, on both the sides as.
Yeah, absolutely. Nilesh Shah is back with us. Nilesh bhai, patchy line perhaps, so I'm going to try and ask you to complete your point that you were making. I believe you were speaking about the liquidity.
So on the debt market side, the point I was trying to make was that a lot will depend upon what is the government's borrowing program and how will they manage 8th pay commission recommendation. In FY, it's effective 1st Jan 26. So part should have been provided in FY 26 budget. Part should come in FY 27 budget. Now, will government provide in FY 27 revised budget estimate? That's about 4 lakh crore funding. Or will they take it all the way up to FY 28 budget? So market will be closely watching what government does with the 8th pay commission recommendation.
Yeah, it's a fair point. Nilesh bhai, thanks so much for joining us this morning, and Mr. Gandhi as well. Thank you so much for taking the time and for speaking to us. Ms. Goyal as well as Tanvi, do stay with us. And I want to come to you, Ms. Goyal, on specifically that core inflation print that we were speaking about earlier. For the full year FY27 at 4.3%, it's pretty benign. And based on what the governor said, and if you adjust for precious metals within that, it's even lower in FY27. So from that perspective, we should be sanguine, shouldn't we? And we should maybe be looking at the growth levers that need to be pushed. I wonder what you think about that.
Yes, I think as the governor said, for 16 months, they've been over forecasting inflation. So currently, if inflation does rise somewhere, inflation has been very, very low. Core inflation has been low for many, many months now, which shows that overall there's no excess demand in the economy. So this is why you expect headline, though it's driven up by transient commodity shocks, will approach headline. And the RBI can take the end period expected inflation, which is at target, in order to keep rates on hold. That means real rates do come down somewhat as headline inflation rises, and that will be a stimulus for the economy. It's very important to stimulate or support the economy at this juncture, because policy now has the weight and the capability to counter external shocks. It does not have to tighten in response to those. And also, we are seeing a revival, a broad-based revival in private investment, in corporate investment after a long time. They've been waiting for this. I think corporates have some reassurance, A, that inflation is anchored at 4%. They don't have to raise prices in response to temporary commodity shocks because inflation will come down in a few months and consumers are sensitive to prices. In fact, some research shows that the past commodity shocks has halved in the inflation targeting period from corporates. So, and given the current juncture where the prediction is that core inflation will come down, that headline inflation will come down to 4%, I think they will not pass on as much of the commodity shocks, so which will help core inflation stay benign. I just wanted to make one point about liquidity, the discussion earlier, that earlier markets used to really worry because there were periods when durable liquidity would really tighten sharply. But if you see over the past 2 years, that's not the case. Liquidity has remained in surplus. I think the policy stance now is that to support growth and financial conditions, you need durable liquidity to be in surplus. And I agree with Dr. Gandhi that they have many instruments available in order to sustain this. I think markets should be confident that durable liquidity will be kept adequately in surplus, not excess, because they also have these derivative instruments such as buy-sell swaps. If there are excess dollars, they will buy them now and sell them forward. Yeah. So, and that does not affect liquidity. That doesn't affect liquidity today. They have alternative instruments to the VRRs, etc., to affect temporary liquidity. So there are many instruments available. I think markets can be confident.
Well noted, ma'am. Appreciate your time, Dr. Goyal. Thanks so much for being with us today and giving us your thoughts. We are also being joined by Mr. Ravi Ranjan, MD of SBI. But Mr. Ranjan, I just urge you to stay on because I have to take one final question with Tanvi Gupta Jain of UBS. And Tanvi, in some sense, is there anything within this policy statement, because the action wasn't a surprise, anything within the policy statement that was a surprise to you? We've kind of now getting used to the governor springing one small surprise every statement. This time around, that was missing. Maybe it's par for the course, but did anything catch you by surprise?
Not really. I think the signaling was really good because they are kind of ensuring the market participants that the growth is strong, inflation is sliding down, and plus, the change in the core inflation forecast. I think that was very interesting. 4.7, you're bringing it down to 4.3. Despite over the last since the last policy, oil prices have been volatile. We have seen oil even going as high as 100. Today it is trading below 80. So I think that signaling device is something which I don't see market was pricing in. 10 basis point bringing down the headline inflation is something I can be okay. 5.1 going down to 5, but core inflation going down from 4.7 to 4.3 is definitely a very positive signaling. So I think we also have to see, because market has been pricing in 75 basis point of rate hike over the next 1 year, 50 basis point of rate hike in FY27 before this policy. Whether that is going to change going forward. And the last thing I think where I didn't see too much of a stress by the RBI governor is that global financial conditions are tightening. And that is something, he did mention that some central banks have started increasing rates, some central banks are keeping on hold, but that is also something could be a key market mover beyond monsoons and beyond oil that India has to take into account over the coming second half.
Important point. Ms. Jain, always a pleasure speaking with you. Thank you so much for taking the time, and speak to you soon. Okay, I want to go to Mr. Ravi Ranjan, who's a Managing Director of State Bank of India. Mr. Ranjan, thanks so much for taking the time, and good morning to you. First, your initial thoughts on a no-surprise policy, if we can call it that, and the specific comment that I think relates to the banking system, which the Reserve Bank of India made, which he often does, and he's speaking about the transmission, and he speaks about the fact that it moderated in the months of May and June. So what needs to be done in your opinion? Of course, it's a factor of the deposit growth that you could see. So your initial thoughts about this?
First of all, this policy gives a lot of comfort in the sense that the growth is sustained. In fact, it has slightly gone up. Inflation is contained, that is also a good news, and system liquidity is quite okay. So the broad picture is quite good. There is no change in the rate. So the uncertainty from the policy part, the banking system is very happy that there's nothing in that. While macro uncertainty, particularly the Middle East and some of the El Nino related agri problems remain for some more time. But what is good is that we remain resilient. Q1 was also quite good. And we can see from the result of the public sector and private sector banks that have been released so far, quite comforting. Since liquidity is good, so going forward, this credit growth may also likely to continue. Right now, there is some gap in the system at the system level between deposit and advances. Almost 5% gap is there. But that will convert with almost now $40 billion coming through the FCNB and ECB window so far. And the way we are going in August and September should be pretty good also. So system liquidity problems should not be there. And the convergence between deposits and advances should also be coming in the next 2 quarters.
Mr. Ranjan, good morning. Hira here. You mentioned briefly in terms of the credit growth as well, but with rates on hold right now, how are you expecting credit growth to shape up over the next coming quarters? And from a borrower's profile perspective, is there more caution from that side, or does the demand remain absolutely resilient despite the higher for longer rates?
The good part is that the system level credit growth that we are seeing, it is happening in all areas. The RAM portfolio, the corporate loans. Within RAM also, agri, SME, retail, everything is growing around 15%. So that's quite comforting. And when the participation is from all across, so and at the same time, it's not too high also that it is creating bubble. So broadly, it is demand driven. The rate of interest is also quite stable for borrowers also to plan their requirements. There is slight moderation in the home loans, I would say. Almost instead of 15% overall retail growing, the home loans is growing around 12 to 13%. But that is also considering the high base that the banks have. That is also quite healthy. And the best part is that asset quality has held on. In Q1 also, all the banks, no bank has reported any worse GNP ratio. So overall, I think we should look towards Q2 and Q3 with much optimism.
That's certainly good to hear, Mr. Ranjan. I do want to ask about your view on FCNRB, because that's not something that was in the RBI monetary policy statement, but one assumes that this will be spoken about when the press conference takes place, because you've seen inflows in the swap window of over $40 billion. And as the largest bank, you've obviously mopped up quite a good portion of that. And the anticipation, I think, a commentary from State Bank of India itself, is that September you anticipate even more flows to come through. So what are the pros and cons, in your opinion, of overshooting even the initial optimistic numbers for the system as a whole, when now we're talking about $90 billion on the top of flows that could come through?
The good part is that why I talked earlier about the gap between deposit and advances of 5%.
Yeah.
So if the FCNB liquidity continues or accelerates in the next 2 months, this will further help us in this maintaining LCR, maintaining a better CD ratio. So all these things will be pretty good. And mind you, this deposit is coming without any requirement of CRR also. So the net cost of funds, that will also go down for a lot of banks, particularly who are dependent on differential interest rate for bulk deposits. So the NIM, it is a NIM accretive for most of the banks. It is good for the CD ratio, and it's good for overall quality of banking system in the country.
Yeah. Mr. Ranjan, just a follow-up there. Good morning, Neeraj here. While there have been conversations in the first couple of months about what's the quantum of funds that will come in, I think the recent data seems solid. You guys are amongst the leading players out there too. Do you reckon that come August, September, the numbers could well surprise? Part one of my question is that. Part two, will the RBI post this September limit getting over, will there be something in terms of a move or in terms of parking the funds in a way that when the redemptions eventually come about does not disrupt in any fashion? Will some moves need to be taken for that?
As far as I remember, neither the RBI or not any of the banks have given any target. By initial estimates from different agencies have been between 60 to $100 billion. So what I am expecting is the way it has is panned out in the first 2 months. Probably we may end up at the higher end of this bracket. So close to $90-100 billion, and that will be quite good. Now whether this will impact the good part is that this will be good for the CD ratio and the credit growth. How RBI plans to use this fund for requirement 3 year or 5 year down the line, that is still not clear, at least at our level. RBI must have planned. They have to look at short term, medium term, and long term requirements also. But the good part is that even the USD INR, it has stabilized. It is stabilizing around 95, 96. So the pressure on rupee that was there, that has also come down. So overall, I think, of course, it is still 2 months to go before this window closes. And after that, probably the banks and central banks may sit together and come to a definite strategy how to use these funds.
That's on FCNRB and what everyone's looking at. The other question, Mr. Ranjan, I have is with regards to our inflation course. I know we spoke about it, but now the governor is expecting inflation to peak in the third quarter of FY27. Do you think inflation risk could actually probably impact the consumer borrowing behavior, number one, and eventually impact the repayment capacity as well, specifically in certain retail as well as MSME segments? How are you looking at that chain of treatment?
Probably if you would ask me this question 2 months back, the response would have been more in what you are asking. But the things have changed for the better in the last 2 months. Inflation at overall number as well as trajectory both look within the in fact, much below expectation. And we should be able to manage this around 4 to 5% for the rest of this financial year. So this will, if it remains below 5%, I don't think it will impact the consumer behavior, because this is what everybody's expectation is. And that's why we are seeing that while the demand is also good, the credit quality has also been resilient. There is not much pressure either in terms of gross NPA or even in SMA area. So banking system is quite stable that way.
Indeed. Mr. Ranjan, as always, an absolute pleasure speaking with you. Thank you so much for taking the time today.
Thank you.
All right. By the way, take a look at the markets and don't pay too much attention to the percentage change. Take a look at the level, as Neeraj was saying earlier today, for the benchmark in particular, right? 24,615 being held. The Sensex up about 0.4%. The bank Nifty at 57,800 plus. All of those are pointing to pretty decent signs for the Indian equity markets, and the breadth has continued to look reasonably good. So just pull up the advanced decline ratio and see if it's closed just at all. In the morning, at least it was strong. It continues to be pretty decent at this point, and that strength in the broader market is visible as things stand right now. But all told, I think it was a good start today.
Yeah, I mean, there is a little bit of resilience that we are seeing as well, not only from an economy perspective, and I think likewise being reflected in the markets right now.
Yeah, follow crude. Crude is lower. We'll be higher.
That's a fulcrum.
For now, that's the fulcrum. For now, though, now from the fulcrum on this table, which has been presenting this show for the last nearly 3 hours, it's a wrap. On a note that the markets are looking okay. Thank you so much for tuning in. Of course, stay tuned though. Ask Profit is up next, and get ready with all your queries.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
ये लीजिए भाई, मैंने बनाया एक व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आप हमें ना बहुत। फैमिली विजिट करना अलाउड है? चैनल तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from facts and explain why listening better could mean living better. Only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform. Digital first. Virality.
Welcome back. You're watching Ask Profit here at NDTV Profit. I'm Mahima Vachajani, and with me, as always, is Puneet Zaveri. And this is a show, of course, that gets all your stock-related queries answered. Of course, today we have a curtailed version because we had the monetary policy. Just to give you a quick roundup of that, the repo rate has been unchanged. This was expected. Status quo was expected. 5.25 is the rate at which the repo rate has been maintained. Inflation remains the key watch point. Of course, we've talked about this as to how June inflation picked up versus May as well, and the important commentary was that the government expects this to peak by Q3 FY27 and moderate thereafter. I think the other important factor was also GDP forecast being raised by 10 basis points to 6.7%, and the message from RBI remains at the wait, watch and assess situation. Lastly, CPI inflation is expected at 5% versus that of 5.7%. So these are some of the key takeaways that you must know about from the monetary policy. But let's take a quick look as to how the markets are doing and then jump to your questions quickly. The Nifty 50 right now is trading around the 24,600 levels with an uptick of just 0.18%. The Bank Nifty almost flat as we speak around the 57,800 levels. Let's try to pull up the Nifty 50 heat map and see as to where the action is exactly. You have something like Larsen Trubro, which is topping the charts up 1.8%. Shriram Finance, yet another day of strong gains coming in for this one. Grasim Yesterday saw profit taking coming in. In fact, it was not profit taking, but the correction of cash settlement happening. But today is back in the green, up by about 1.8%. There's also M&M, Interglobe Aviation, HDFC Life Insurance, Bajaj Auto, all doing very well. Auto names continue to do well, in fact. On the flip side, you have ITC, which is taking a knock, Polo Hospitals, SBI Life, Coal India, TCS, Nestle, some of the names that continue to be under pressure. Let's try to pull up the mid cap 150 and the small cap 250 as well and see as to where it is at right now. In fact, today the small cap 250 after almost 600 days has touched an all-time high, but the mid cap 150 seeing gains of 0.4% and the small cap 250 up by about 0.8%. Quickly the BSE 500 as well to see as to what are the counters specifically buzzing in trade and take a look at those names as well. You have something like La Opala, PNB Housing, Motherson Wiring, Bosch, Happiest Minds on the positive side. Restaurant brands, yet another 5% gains. Yesterday it was locked in upper circuit and now 5% gains today as well. On the flip side, you have Nykaa, though the numbers were in line with expectation, but I think it's seeing profit taking coming in, and Ajanta Pharma, Balrampur Chini is where there's pressure coming in as well. So sugar stocks seeing some profit taking as well. But let's get in all your stock related questions now, and to answer them we're now joined by Girish Sodani, co-founder of Ensure Capital, and we'll soon be joined by Kush Bora, founder of kushbora.com as well. Girish, very good morning to you, and thank you so much for joining us at such short notice. I'll take the first question, which is coming in on JSW Cement. This is from our viewer Pramod, who's writing us from Bengaluru. He says that he wants to know whether from a long-term perspective, can he continue to hold this counter or not? What is your view like?
So again, the cement sectors looks very attractive. The cement sectors, JSW Cement sitting at the level of 132 approximately. With the market cap strongly build ups, the quarter numbers are strongly build ups with the revenue go by 11% year-on-year basis. Overall structures was very strong. So the can be hold for the at least 1.5 year to 2 year time on. The expansion plans is still there. So the reflections will be coming for the next 2 to 3 quarters.
Okay, all right. The next one that we have is coming in on Dabur. Harsha from Vijayawada is holding 220 odd shares at the levels of 444 and wants to know whether to continue to hold or sell this one. Girish, yesterday, of course, with the development of FSI issuing notice to Dabur for claiming 100% purity or 100% wherever they put that label, the stock did take a knock today. Let's try to pull up as to what it's doing right now. But overall, from a fundamental point of view, what would you recommend our viewer right now, Harsha, about Dabur?
So again, if we talk about the FMCG, I think the FMCG facing a little bit pressures because of the prices going to be appraised. Apart from that, the differentiations between the supplies from the geographical tensions. So if we talk about the Dabur, yes, the Dabur looks very strong in the means of fundamental terms, but the view is completely based on the 2.5 years down the line, because I think this reflection is going to be reflected by the next 3 to 4 quarters itself. So I think the FMCG is completely packed going to be faced these type of pressures into it. So if you want to hold for this particular time duration, the Dabur is a good bet.
Well, let's take the next query. And before we do that, Girish, I'm being told that it's your birthday today. Is that true? And if so, wish you a very happy birthday as well, Girish. And thank you so much for joining in today. I'm sure our viewers will also wish you, and we'll let you know for that. But thank you for joining us today.
Thank you. Thanks a lot.
Well, and let me go across and take the next query also from Subrata Mukherjee. She wants to know about Jubilant Pharma, Girish. If it's a good time to buy this particular counter, what would be your opinion?
So Jubilant Pharma, I think this is the right time, but if you're having the visions of at least 1.5 year, I think these are 2 times bets. We can say that you can just invest into the 2 installment basis. That is the current level what we're looking out. Apart from that, if you are getting a chance to enter at the level of 850 to 855, this is a very good proposition where you can invest for the longer period of time. All the farmers looks very interesting. Apart from that, the performers as well as the complete group Jubilant revenues was up by approximately 25 to 28%. The PAT was also going to be increases very speedily. So you can invest in this particular.
Okay, so that's the view coming on Jubilant Farmer. And Girish, a very, very happy birthday to you. I did not know it's your birthday. And thank you so much, in fact, for taking out the time on your birthday and joining us here. So really appreciate it. And I'll ask our viewers also to keep wishing you. But we've got our next question. In fact, Kush has also joined us now. The next question is coming on Balaji Mines. Our viewer, Bhavisha, is holding 7 shares at the levels of 2,112 and wants to know the short-term targets on this one. Kush, you're right on time because we started getting technical queries. Balaji Mines has seen significant pressure in the last couple of days. What do you make of charts right now for this one? Hi Kush, can you hear me?
Hi, Mr. Paperi, good morning. The line's a little patchy, I'm afraid, so you'll have to
Okay, I think we have some technical glitch. We'll try to fix that. By the time we get that fixed, I think I'll take the next question, which is coming in on this on KC International. Ramesh from Coimbatore has 1,000 odd shares, bought at the levels of 485. Wants to know if this is a good counter to continue to hold from a long-term perspective. Girish, what do you make of KC International?
KC International, right? Yes, KC International. Okay, so the operations profits was little bit disturbance because of the completely restructuring going on in the terms of overall revenues as well as the margins books. But if you're having a perspective of around 2 to 3 years down the line, I think this is a good bet for the KC International.
But let's go across to our next caller from Agra. Gary is joining in for a stock-related query. Gary, very good morning. What's your query?
Good morning. I got the Indomim shares allotted to me in the recent IPO allotment. I got 30 shares at the rate of 485 rupees. And at the moment it is trading about 780 rupees. So shall I hold or shall I book my profit? What should I do?
Well, firstly, Gary, many congratulations. Your luck is running wild because there were a couple of other IPOs on that day too. But most certainly you got the most preferred one. But Girish, I don't know if you have coverage. I know the company is yet to report results, but very strong interest before the IPO as well. Operates in a niche space. What would be your opinion? Should he continue to hold on or take some money off the table?
No, can hold this particular counters. The strong build-ups in the metal injection moldings, basically, they are just having the 15 global manufacturing facilities overall. And in the term means we are looking out that their numbers should be there in a good positions in the next 3 to 4 quarters itself. Obviously, there should be a pressure related to the geographical tensions. But I think the overall scenario was very interesting. If you're getting a chance to just enter at the level of 650, if the stocks come down, then just do an average and add more quantities for that particular level.
Right, so that's the view coming on Indo MIM. The next one that we have is on AU Small Finance Bank. Murli from Hyderabad wants to know if this is the right time to enter from a one-year perspective. And by the way, Girish is also wishing you a very happy birthday. Your view on AU Small Finance Bank?
So, AU Finance Banks, I'm looking out little bit worried about their margins pressures right now. Obviously, the proposition, we can say that the expansions at the Tier 2 or Tier 3 cities are going to be very interesting. But I think if you are having a view for the fresh allocations, I think you have to wait for some time. Let's see how their next quarter results are going to be there. If the margins are continually increasable in the expansions mode already, then they will be the good bet.
Yeah, got it. Well, the next question, and this one's coming from Senorita. She wants to know about Exide Industries. Bought this counter at 563 a couple of years ago, and in 2024, of course, you had that peak of a lot of mid-cap stocks. Since then, stocks not recovered to that level. She wants to know if she should still continue to hold on. Girish, we saw good results actually come through for Q1. Would you expect her and largely recommend her to continue holding, and if she should average down as well? Is this the time?
No, I think average is not advisable as of now at this particular level. But I think you can the client can hold this particular counter at the levels where he can just, he or she can just bought that particular stock. But fresh allocation is not advisable.
Okay, all right. And what move on the stock, right? From its low point in March, it's just gone one way upward. So very interesting. Today also it's up 3.6%. Moving on to the next one, which is coming in from Osama, who's writing us from Dubai, asking about NHPC. 1,062 shares is what our viewer has. and bought at the levels of 96 rupees. Wants to know whether to continue to hold this one or not. Girish, I'll stick with you for this one as well. What do you make of NHPC? And also, Osama is also wishing you a very happy birthday.
So for the NHPC, I think this particular counter can be at the right level where the investor can basically do an averaging in particular level. That the level should be 776 and 77 should be there. Obviously, the massive expansion pipelines are there. They're targeting the boost the installation capacity also by 59%. So I think this particular going to be impact in the next 2 to 3 quarters itself, and the reflections will be in the financial year 27-28. So overall the structure was strong as of now, but can do an average at the level of 75-76.
Well, let's go across to Hyderabad now for our next caller query. Murli is joining in from Hyderabad now. Murli, very good morning to you. Thank you for joining in. What's your query?
Yeah, good morning to everybody. Happy birthday to Girish, sir. My question is, if I have to bet on Chennai Petro or AU Small Finance Bank, which would be the better one to enter at current market price?
This might be the first time, Murli, where we've taken someone's query on WhatsApp, also answered his call too. So I'll take Chennai Petro because we just took AU Small Finance Bank with Girish. But Girish, on Chennai Petro, is there a right time to enter for Murli?
Yes, for the longer period of perspectives, yes, the money can be invested in this particular level itself. So overall, the structure was very, very strong. Let's talk about the revenue. The revenues goes approximately 80% year-on-year basis. Profit PAT also going to be increasable, as well as they are just do all their restructuring processes already completed, and that reflected in the margin numbers also. So I think the for the longer period, obviously the Chennai Petro is a good bet.
Girish's birthday, but Murli has gotten gifts today because both his queries were answered. Anyways, moving on to the next one. It's coming on BSE. Bhaskar from Bengaluru has got 50 odd shares at the levels of 3,700. Saying that despite of good earnings, the stock is taking a knock today. But from a slightly long-term perspective, what should he do going forward? Girish, what would you recommend for BSE?
So can hold this particular counters, good stock, good numbers. We can say that the keep already expansion is already there. 43 new stock additions as well as the mutual fund distributions are going to be increases in the overall BSE market index. So the numbers was good. Can hold this particular.
Well, the next question coming through, and this one's on Ashok Leyland. Our viewer Khurshid has bought this at 160 odd. Wants to know if if he should still continue to hold this and if there's more upside here. Girish, a quick view.
So the stock fundamentals was good, but if we talk about the Ashok Leyland, the movings was little bit slow. That's a slow moving stock we are already discussed in the previous shows also. The financial numbers, quarter numbers was good in the terms of overall the EV segments and the expansions strongly built up in the switch mobilities itself, almost double their numbers in the overall expansion modes. But if you hold this particular counter for the 3 to 4 years, it's a very good stock for your portfolios. But if you want early earnings, then I think you have to switch this counter with another one.
Let's pull up Castrol as well. Company came out with good set of numbers. You saw a good reaction today as well. But we spoke to Saugata Basure, who's the managing director of Castrol India, to understand a little bit of where that growth came from and how were the margins going forward. Can the street expect, because it was the highest that they've done. Let's listen into what he has to say. What you've seen in this quarter, 21% growth in revenues, EBITDA is up also 50%. How much of that has been driven by volume growth for you?
Good morning, and thank you for having me on the show. It has been a resilient performance in a very volatile environment, and you've correctly said that the revenues are up, EBITDA is up. Our volumes continue to grow ahead of the market growth rate. In this quarter, we saw broad-based growth in volume across our industrial, consumer, institutional sales businesses. We did take prices up early in the quarter. There was a significant volatility in raw material prices and availability, and we leveraged our supply chain network to maintain supplies of our product. And we took prices up to offset some of the raw material price increase. Having said that, I see the raw material price increase to also flow through into this quarter, which is the July to September quarter. And we are also watchful of demand in the second quarter on account of an uneven monsoon and also inflation pressure building on in the supply chain. So that's our response to the pricing response has been taken, and we'll remain watchful in case more needs to be done in the second half.
Saugata, could you quantify what was the volume growth in this quarter? Your peer has done almost 17%. Was yours also in a similar range?
So we benchmark ourselves to the market growth rate, and our market is expected or is projected to grow in the range of about 4%. We are ahead of that. And that has been our trend for the last couple of years. And therefore, we are positioned to participate in the growth that is coming through in India, and at the same time grow our market share. And this is something we are seeing across our industrial business as well as our consumer automotive business. The consumer automotive business is being driven, the growth has been driven in our case by a big build-up of infrastructure into rural India. Again, something that we've been talking about for the last 2 years. We now cover about 45,000 outlets in rural India. We have a network of about 950 rural service express. That part of our business, again, continues to grow at double digit in terms of volume over the last couple of years now.
Got it. And you mentioned also that you have taken some price hikes in this quarter. Could you mention how much were they? And as we go across, because we've seen the first month go through for quarter two, we've seen those the volatility come back yet again and then recede a little bit. Have you taken any price hikes in the month of July as well?
So look, we have taken low single double-digit price increase in the previous quarter. For us, April to June in the second quarter, we follow Jan December financial year. We anticipated that the volatility will remain in quarter three this year, and we are taking a long-term view. Our pricing action will be determined by two factors. One is to keep the business within an EBITDA range of 21 to 24%, and the second is to balance the price actions in the short term against our desire to continue momentum on volume growth and market share. If the volatility in quarter three sustains and flows into the next quarter and it requires us to take pricing action, we will do that.
Got it. Also, just one quick question, because your margins at almost 26.4% on a quarter-on-quarter basis have also seen more than 500 basis point increase. Now, you mentioned that you've taken a low double-digit price increase, so your point well understood. But could you guide us of how we should look at margins for the next 2 to 3 quarters? Because you also had the raw material prices at elevated levels. They have been volatile. Despite that, the margin growth has come through substantially. So while we understand that quite a few of that has come through from the price increases, do you expect that this margin growth between the range you mentioned should continue, or this 26% is slightly more higher, led by multiple factors, and could be the ceiling at least for this year?
Well, what I can say is we will maintain our guidance of 21 to 24, and that is the long-term guidance. Given the supply chain volatility is of a very high order, it's very, very unusual. We've taken various actions. Pricing is one part of it. We have also been very conscious in terms of looking at our cost lines. So we are trying to manage the business within that 21 to 24, right? Depending on how long the volatility sustains in the environment, you might see some volatility in the EBITDA margin range, but in the long term, we will remain in the 21 to 24% guidance that we have given.
Well, that was the management of Castrol India. Very strong margins, but as the management mentioned, a lot to watch out for in the next few quarters as well. But let me take the next query, and this one's coming in on BSC. Stocks up almost. Stock is up today on the back of results, and then cooled down at. We've taken this query. Okay, we've taken this query. Let me take the next one then. This one is on Manipal Health, the company that got listed today on the exchanges. Vishwanatha Reddy has gotten allotment and wants to know about his 25 shares, what he should do with this counter now. Girish, yet again, very, very early on in its listing journey. But how do you look at this counter now in terms of comparison with its valuations, also with its peers?
So I think Manipal Health, I don't have as such of high-end data as of now, so not able to do any explanations into it. But overall, the decent numbers, I think IPOs already listed in this stock. So let's see how the reflection would be there for the next 1.5 quarter. But for as of now, if we talk about any health, these type of companies we are talking about for the hospital industries. So I think you can book the profit as of now, and let's see how the stock will be performed for the next 1.5 quarters for 2 quarters for the long term perspective, obviously.
Okay, all right. The next one that we have is from Sanjay, who's writing us from Bengaluru, asking about an auto anch name that could do well in the next 3 to 6 odd months. Kush, I'll come to you on this one. You know, auto as a pack has been doing very well, but anything specifically from the auto anch space that you think could do well in the next 3 to 6 odd months?
Yeah, I hope my connection's a little better than the previous occasion.
Much better.
But yeah, oh great. I'll give two names, Lumax Auto and Sansera. Sansera's already ran up quite a bit, so you might want to buy on declines. But if you want to buy a fresh, buy a Lumax Auto. The rally is just starting at this one. 1600 or just under is very deep. That's stop loss. On the way up, 1770 and about 1900 are your targets. So Lumax Auto from the auto space.
Just a follow-up also, Kush, on SPR Auto also, it's something that you've spoken about in the past. There was a correction there. Would you buy into this one as well as, why haven't you wished Girish yet? It's his birthday today.
Hey, my bad. I entirely missed that conversation. Girish, happy birthday. So good to share the screen with you. Hopefully we'll meet in person also very soon. So many, great birthday wishes to you as well. So, you actually asked me the right question. Shriram or SPR Auto, as now it's called, has been one of my top picks, continues to remain so. This is also something you can consider. I suggest buying this on every decline. So, yes, you can consider SPR Auto as well.
All right, okay. So that's the view coming on SPR Auto. But time now for the rapid fire round. Kush and Girish, you both know the drill. Try to keep your answers as short as possible. The first one that we have is coming in, and this is on small cap names that you can watch out for the next 1 to 3 months. Sunita from Delhi wants to know if at all anything you have on your watch list, Kush.
Something that we recommended today, by the way, Artemis Med Services. 325 was the second target that has been hit. And I remain super constructive on this one. So you can consider this even.
Next one's on Hindustan Zinc. Bindu from Hyderabad has bought these shares at 668. Girish wants to know the long-term picture for this one.
Sorry, can you repeat this stock?
The Hindustan Zinc.
Can hold this particular counter for the longer period.
Okay, the next one that we have is on Shriram Finance. 140 shares bought at the levels of 983. GS7 from Hyderabad wants to know if you can continue to hold this from a long-term perspective. Girish, what would you recommend?
Can hold this particular counter, but averages is not advisable. Avoid the averaging.
Okay.
Pramod has bought into Dr. Reddy's at 1350. Girish, the earnings have been very disappointing now for the last few quarters. Should he continue to hold or switch out?
No, switch out this particular counter.
Okay, the next one that we have is on Amara Raja. Sriram from Visakhapatnam has bought it at the levels of 935. Continue to hold, sell, Kush.
Decent entry point. The momentum starting to pick up. You should hold. Stop loss at 910.
Next one's on Nykaa, Kush. Neelam from Jaipur has bought these shares at 241, so holding for a while. What's a 3-month view is the question.
No, you can continue to hold. I think the dip today, along with other things, is also profit booking. My suggestion: you should continue to hold. Deepish stop loss at about 310, 305.
Okay, Wipro is the other one that Rajesh from Hyderabad wants to know about. From a long-term perspective, can he continue to hold the 75 shares that he's bought at the levels of 205? So elevated levels. Girish, what would you recommend him?
So can hold this particular counter. IT Packs looks into the restructurings, but the view is obviously a long term, but the perspective would be at least 1.5 year to 2 years.
Okay.
Next one, Girish, is on Castrol. We actually just spoke to the management. Satyan is holding for the last 2 years at 215. So at elevated levels, should he continue to hold, Girish?
Yes, obviously the Castrol's numbers was very fantastic. Obviously the expansions motor is still going on. So the restructuring already done by the management, and the margin should be reflected by the next 2 to 3 quarters itself. So hold this counter for at least 1.5.
Okay, the next one that we have is on Glenmark Pharma. Our viewers bought 40 shares at the levels of 2235. Continue to hold. Average, again a long-term query. So Girish, your view?
So for the Glenmark Pharma, obviously hold this particular counter, but the average is advisable for the 2011. That is the better levels for the range of averagings.
Okay.
Kush, the screen can't hold your smile in when we talk about Glenmark. So that opinion also from you, as well as on MTAR Tech, we have to ask you this question. Shiv Prasna actually bought it at 5480. Stocks, locked in upper circuit now, but would you recommend her to exit at the next rise?
Yeah, my smile was because of the averaging, and you already know the answer. Don't average, continue to hold Glenmark. MTRC, it's now starting to see rebounds. I wouldn't suggest an exit if you've seen the pain on the way down. Might as well see the gain on the way up. But yes, trailing stop loss advisable, close to 6,061 levels.
Okay, the next one is on Suzlon. Our viewer Rajesh from Hyderabad has bought 1,000 shares at the levels of 70 rupees. Continue to hold, sell, Kush?
No, I think you can continue to hold for some more time. Keep a strict stop loss at 44.
Next one's from Ashwini from Chennai on Dr. Agarwal's Healthcare Limited. I think there was a big brokerage call on the same also, Girish, today. But what's your opinion on the stock?
Counter as of now.
Okay, the next one is on Landmark Cars. Avinash from Bengaluru has bought it at an average price of 494. Continue to hold, sell. Kush, any view on the charts?
Yeah, you can continue to hold, but I would suggest partial profit booking once it crosses 575 and then hold the rest with trailing stop losses at about 525, 520 levels.
Okay.
Sriram from Chennai is holding on to signed DLM, but at 373. So attractive levels. Wants to know a long-term view, Girish. What's your view on signed DLM now?
So signed DLM stocks fundamentals looks good. Obviously, the quarter numbers are going to be reflected in the next 2 to 3 quarters itself. But I think at least 25% booking should be advisable, and the remaining can be hold discounted.
Okay, the next one is from Vijay. He's been holding Balrampur Chini at the levels of 565. Can he continue to hold this one, Kush?
Partial profit book now. Hold the rest with a stop loss at about 610.
And the next question is on Grow. Raju from Bengaluru wants to know the 9 to 12 month view, Kush. What do you see on the charts now?
Could consolidate, already had a good run. So it's consolidating. I wouldn't really advise buying into this entire sector right now.
Got it. Well, that was the last question for the rapid fire as well as this edition of the show. Kush as well as Girish, thanks so much for joining in. Girish, have a wonderful evening, and we'll see you, of course, later this week. But thank you so much for joining in. A truncated session, but we got a lot of queries today. Stay tuned though, viewers. A lot more action on the other side. And we'll see you there on 2 p.m. For the rest of the queries. But for now, it's a goodbye.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from facts and explain why listening better could mean living better. Only on NDTV Profit.
रे
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real.
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey. This is the show where I get you the hottest companies and also at times very chill companies as well. Why I'm talking about chill company? It's very interesting and maybe this will be the first time you can guess the company in the first hint in KYC. And of course, there is no guessing. It's India's largest beer manufacturing company. I know the good times are there, but there are some more hints to it as well. It's the part of Heineken company right now. Also, two more hints to you, but largely I'm sure you must have guessed it by now. Strong Q1 from their premium segment, and also I'd like to point out the stock has reacted positively from the May lows as well. It's up 12%. Already I'm sure you know the company's name, but nevertheless, it's the good times. So the company in focus is United Breweries. Interesting, right? We have got in a decent size, you could say mid-cap, large-cap company in KYC, and at times change is necessary. But why are we getting this company right now? What's the main focus like? And yes, earnings season is going on, but the company has come up with something really good, especially on the volume growth segment, despite inventory reduction. How did that happen? That's the big question. Also, other key questions we'll be asking the management will be the improvement in the free cash flows, how they have been able to do that. Remember, larger companies have better balance sheets and cash flow strategies, and that's what's playing out. Margin recovery guidance, is there a stress right now in inflation and supply chain? That's the big question to be asked. And apart from this, the Karnataka policy and the UK FTA impact, is there any more positive leg of growth for them? Or is beer outside this FTA impact? Apart from this, why FY26 borrowings has spiked, especially in the short-term segment? We'll try to understand the entire methodology, especially looking at the balance sheet and of course the capacity addition plans. Is the company planning something big in Karnataka? We'll try to get that answer for you. And the premiumization trend. This is something which is going on for the last 4 to 5 years and expected to go much more. So industry specific questions coming in as well. But let's understand what the company does. I'm sure a lot of consumers know it, a lot of stakeholders know it, but let's do a revision. What does the company do? It's India's largest beer manufacturer. Also, let's point out what are the other key numbers. It's a part of the Heineken company right now. This is the logo. I'm sure a lot of you follow Champions League, and this is the logo which we generally see. Portfolio now includes, of course, the Kingfisher Ultra, Kingfisher Ultra Max, and Amstel Grand as well. Also, they are into the non-alcoholic segment also. That's where Gen Z is also focusing on. And this is called Heineken 0.0. Interesting, because the alcohol content is 0, but maybe the taste would be on the alcoholic side. 18 owned breweries they have, 28 products in the portfolio. There is, of course, a mix of owned as well as in-house manufacturing. The Q1 revenue was strong, especially by the volumes, price hikes was there, and change in geographic mix was also recorded. But let's understand the war-related cost pressures were partly mitigated, driving a EBITDA beat as well. Understanding other key factors on Q1, the overall sell-in volume was at 9% and sell-out volume growth stood at 13%. The premium volumes turned margin accretive for the first time. That's where a 7% year-on-year basis growth was also recorded. There are key strategic updates also for the division. Recently, they commissioned their canning line at Telangana. Second important reason and the strategic update coming in for United Breweries is the progress on the capital investments, especially in Maharashtra and Uttar Pradesh. That's where the expansion is happening. Strategic manufacturing tie-up with ABB in Punjab post the closure of Ludhiana Brewery. So a little bit of reorganization is also there at play for United Breweries. But India's growth drivers, the first is the evolving consumption culture. People want more options going ahead, and things are of course moving towards the soft beer category as well. Rising affluence, not just tier 1, it's tier 2, tier 3, tier 4, all across the story is playing out, and the shift towards premium choices as well. So a lot of trends are moving, be it Gen Z, millennials, the way the consumption is happening, it's changing in India, and of course the digital and channel modernization as well. That's also very much important. So these are the growth drivers for this industry. But let's try to understand other key factors, especially what may work for the company. The volume growth remains strong. Second important reason I would like to point out is the inventory level. That is reducing, but despite that, the company is doing well. So the working capital churn is improving as well. That's of course, you could say one of the key reasons. And premiumization, this is a mega trend if you catch it, and the company is diversifying. Let's talk about another reason what may work for the company. That's the progressive policy reforms which are happening in the states, be it Jharkhand or even Tamil Nadu, Karnataka. So a proper re-rating is happening and a disciplined working capital management is there, and that is why we saw the free cash flows also going up. But what may not work for the company, this is largely industry specific risks, mixed views coming in from the analysts, and just hang on with me, I'm going to explain you how much buy, sell, hold is there. Valuations still remain fairly expensive. This is largely for the entire, you could say, alcohol pack. The inflationary pressures is not over yet. There might be some issues, but this is something which is industry specific and an uncertain macro environment. Are the cans going expensive? Is the bottling cost becoming expensive? Supply chain issues. So these are the sectoral overhang for the company. But I've given you the enough picture for United Breweries, but let's try to understand the KYC ratings of where things stand. And of course, we have the usual income statement, balance sheet and cash flow. But interestingly, I have added the volume growth here. When you are actually judging a company, the return ratios, if you're expecting, it's largely very inline and flattish, so it doesn't make sense to analyze that. Shareholding street cred is important over a period of time, how things have changed. I've got you important valuations, peer analysis with 3 more companies in this space. And lastly, the analyst take, where there are mixed views coming in. But what are the total numbers and the 12-month target price? You need to be with us, and I'm going to give you that number. Let's understand income statement, what's happening here. That's the first rating. Largely, you could say single digit growth coming in the revenue and EBITDA. PAT numbers are improving. Q1 was a positive surprise. If you remove the margins front, there has been a largely, you could say, a decent set of numbers coming in despite what's happening in the industry. So there was a positive surprise. So I'm going to give this a neutral rating in my analysis when it comes to United Breweries income statement. Balance sheet, very much important to track, and largely we have seen that the borrowing levels that has spiked up. So we'll try to understand from the management why, but it's decently managed. It's of course an MNC. Properly it is managed, and the cash levels are also pretty strong and they're expanding as per the key ratios. So it's a neutral rating from my side as well. Cash flows has been the big surprise in my analysis. Look at the jump, the free cash flow numbers. This is not only in Q1 but in FY26 also. This is the number to talk about. A really good working capital management coming in from the company, and the operational to EBITDA conversion, that's at 51%. This is also positive. So overall, the cash flow for United Breweries remains strong. Now let's talk about volume growth, and volume growth has been pretty decent. It is around that 7 to 10% mark over the last 3 to 4 quarters, but then the momentum coming up, and this quarter itself it's at 11%. So definitely there is a positive momentum. Of course, there are some adjustments to it also, but nevertheless, this is a strong performance despite the headwinds coming in the industry. So I'm going to give this a thumbs up as well. Let's talk about shareholding, and largely it's neutral. Promoters hasn't moved an inch. It's at 71%. One side FIs are there, slight decrease coming in, but the other side the DIs are lapping from 16%, that's coming into at 18%, and FIs largely there has been a decrease from 7% to 5%. So net, it's a neutral rating for the shareholding segment. But let's talk about street cred, how much money actually the stock has made, and at times seems like there has been a patience testing, especially if you're a long-term investor. Last 5 years, no return has come. It's been flat. Congratulations if you are a trader, you have made money in bits and pieces, and that is why from May lows the stock is up 12%. But definitely there is a correction in 1 year and 2025 highs as well. To balance things out, I have given this a neutral rating in my analysis. But valuations, do you think despite the stock not performing in the long term, are the valuations quite cheap? Well, the answer is no. The valuations of the entire industry is on the expensive side. Just remove Global Spirits, that's on a 12-month forward P of just 13 times. But the other bigger names, the main three companies which we are actually targeting, UBL, United Spirits and Radico Khaitan, all of them having the valuations between 54 to almost 70 times the forward P ratio. So yes, the valuations are expensive, but this is something which is very generic in the industry, and I'm sure most of the viewers who are tracking this company would know and justify this. So let's keep this a neutral rating here when it comes to the valuation picture. But let's understand the analyst take, what's happening here. There are almost 22 analysts tracking the stock. 12-month target price is 1442. This is the number which you should note down, and there is a concern. One side the analysts are bullish, 36% of them, while hold is 18%. That means majority is still in the buy and hold category, but the sell category is also not small. 46% of analysts have a sell rating as well. So there is a divergence in analyst community also for this counter. So I'm going to keep things balanced and I'm going to give this a neutral rating as well. But let's try to understand the KYC ratings for United Breweries, how things stand as the moment. And of course, things change a lot in future as well. Income statement, balance sheet is neutral, but company has done well in the cash flow and the volume growth front. So I've given this a thumbs up. Let's pull in the street cred and shareholding, and largely that has been quite neutral. Valuations, this industry is fairly expensive, but analysts take divergent, buy or sell. So a little bit of concern, but the total KYC ratings for United Breweries overall comes at 5 out of it, largely in line to positive numbers. And remember, this is the numbers on the past data as well. Things change in the future also, so do keep that in mind. But let's try to understand from the management, and we will be joined in by Vivek Gupta, MD and CEO at United Breweries. But this entire conversation will continue just after the break.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
ये लीजिए भाई, मैंने बनाया एक व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आप हमें ना बहुत। फैमिली विजिट करना अलाउड है? श्रीनगर तक अलाउड। 1 हफ्ते की शूटिंग के बाद में।
Welcome back to Know Your Company, and now we are joined in by Vivek Gupta. He's the CEO and MD of United Spirits. Sir, of course, a good set of numbers, especially with, you could say, a challenging quarter. The cash flow from operations has improved significantly. Do you think this momentum will continue?
Yes, I think we are overall very excited with the quarter results, especially around category growth. This is the second quarter in a row where category grew more than double digit, and we grew almost 13% in our sell-through volumes and 9% in the sell-in volume. You're absolutely right. We reduced almost 20% inventories for 2 reasons. One is we wanted to make sure that the beer remains fresh, especially when we come out of the season and during the monsoon period. At the second time, cash is extremely important in a scenario where the cost has got significantly increased behind the Middle East war. So the discipline in the organization to manage cash flow has really helped us to to accelerate our growth as well.
And sir, the Q1 volumes grew 13% despite inventory reduction. Is this demand sustainable?
The 13%, let me correct, is our sell-through volumes. Our sell-in volumes are 9% because of the inventory reduction. We do expect category to grow, the category growth to be high single digit to double digit over the next few quarters, because some of it is very structural. As I mentioned in my note yesterday, I think it's a time where there is a revolution happening on beer, especially led by Karnataka, where they brought a revolutionary policy to have taxation based on ABV, and we are seeing a significant jump in the beer category. Last year, Maharashtra did some reforms on taxation, which meant that category is growing more than 20% there. We have seen category growth in Jharkhand behind privatization of retail. So some of these numbers are coming behind structural policy reforms, which were long overdue. And some of it is also happening behind strong summer season. But I do expect that the structural reforms will continue and which will continue to make sure that the category will grow. And at the same time, as UBL, our role is to be the category maker. And we continue to invest in brands and invest in programs which lead to the category growth. So I am quite positive that the category momentum should continue in the coming quarters.
Right. Sir, the Q1 EBITDA margins declined this quarter. When do you expect this margin to recover? Of course, the impact was because of supply chain disruption and input cost inflation.
No, thank you for sharing. As I mentioned in the last quarter's call, our industry and specifically our company has been significantly hit by the war impact on the cost. We estimated it is anywhere close to 400 to 500 crore impact on our profits for this year. Despite a 300 bips impact on our gross margin, the team did an excellent job in recovering almost 150 bips out of initiative through better mix, through our own internal cost initiative. I don't think we are out of woods. We are still pleading and requesting states like Telangana, Andhra, and Tamil Nadu to reconsider the pricing, because we sell to the government corporations in these states. And viability of business is extremely important, because if our raw material cost is going up, our packaging cost is going up, there is no way we can recover that cost unless we get higher EBPs or higher price from the corporation. So we are in consistent conversation through BAI and directly with the government to reconsider the pricing. So unless that changes, the pressure on margins will continue to be there. But at the same time, we continue to work our internal programs to save cash, save cost, and make choices. So we continue to invest behind the brands and consumers.
And Vivek sir, you're mentioning about the states, a lot of factors are moving positively as well as some kind of stress, but Karnataka policy, that seemed to be positive. What kind of impact we can expect?
See, it's early days. We are into the third month of the Karnataka policy. What we are seeing is a category growth upward of 40 to 50% in the first 2 months. As I said, it's fueled by summer as well as the policy change. But we feel very positive that this change is the right change for the category and for the consumer, because with the youth population and especially almost 23 million people coming to legal drinking age, I think going towards moderation, having more socially responsible drinks like beer, and having taxation based on alcohol content is the right thing to do. So I really want to applaud what Karnataka government has done here. So I think first it's the right thing to do, and we believe this momentum will continue, and the early signs are extremely positive behind this policy.
Interesting. And Vivek sir, how much headroom do you see for premiumization playing out over the next 3 to 5 years?
See, as I mentioned, we expect premiumization to continue to happen in India and accelerate in this, in this category as well. In 2024, we actually grew premium business by almost 34%. Last year, we grew by almost 23%. And I do expect a similar growth rate to continue in the coming years and years to come. And for us, our brands like Heineken Silver, they are already growing at 28%. Our Ultra is growing at 12 to 14%. And more importantly, we have also got a structural profitability right now, where premium is going to be margin accretive for us going forward, which means that there is more incentive for everyone to invest behind premium brands. So there is a lot of headroom. I think at the same time, we need to really make sure that we manage the affordability at the mainstream and the economy end, and we continue to drive our superior execution at the premium end.
And Vivek sir, how much capacity addition is planned, especially over the next 2 to 3 years?
See, recently we actually announced the commissioning of our can line in Telangana, which actually the first cans were produced last week and also sold to the consumer. Our can line in Maharashtra is on track. We should be able to get our first can from that line in a couple of months. Our greenfield project, which we already announced in UP, is on track, where by end of next year, we will have significant capacity enhancement. We also are working with our partners across India. We work through 17 contract manufacturing partners where we are utilizing capacity. We also are planning to make a mega investment in state of Karnataka in the coming days to enhance the capacities as well. So there's a lot of work happening on capacity.
Right. Speaking of capacities, what will be the long-term mix between the owned manufacturing setup and, say, a contract manufacturing setup? How do you see things moving ahead?
I think, for us, it will be a balance. We do expect to be 60-40 kind of a mix, where, long-term 40% could be contract manufacturing in certain states, because in some states there is excess capacity and it is not right for the industry to create more capacity when the existing capacity is not utilized. So for the overall value chain, we do expect contract manufacturers playing a big role in our growth plan.
And Vivek sir, is there any impact, be it positive or neutral, for the UK FTA which has been completed?
Actually, beer is not part of UK FTA, unfortunately, so we don't see any impact on beer.
Right. Apart from this, also let's try to understand, the FY26 borrowings. Is it all short term, but it has spiked? What's the reason for it? By when we can see the normalization of these short term debt?
I think some of the borrowing is because we continue to make capex investment behind the capacity expansion and new breweries you asked. But some of the borrowing is because we still have significant outstandings in one of these states. So it's a combination of that. So I think we will need to have a good ratio of debt and equity as we continue to invest behind the category growth in India.
Vivek sir, you mentioned a huge number of youth actually coming in the drinking age. So what are the consumption trends looking like in the beer segment, be it Gen Z, be it millennials?
See, I think, as I said, this is a revolutionary time for beer in India, and we have seen what a policy intervention can do. See, 23 million youth are coming to the legal drinking age. All our surveys are suggesting that 70 to 72% of them wants to try a drink. And it is for us to orchestrate towards more socially responsible, moderate drink, which actually builds connection and socialization, which is beer. So I think a lot depends on how the policy interventions are coming, and beer needs affordability, availability, and awareness. We are very positive on what we are seeing in states like Karnataka, states like Andhra, and states like, Jharkhand, where, either the retail environment is improving or affordability is improving, and youth are preferring beer. And Kingfisher is actually still the most preferred brand when it comes to trying a new beer. So we believe that future in India of beer is very, very, very strong. If you look at other countries, the big markets for beer are Brazil, Russia, China, all of these emerging markets. And as we go towards 5 trillion economy, beer will play a big role in us. We also did an economic impact study which showed that, we contribute to almost 43,000 crore in country's GDP, which is 0.1% of GDP, and there is a lot of scope for the industry and the category to grow in India.
All right, Vivek sir, it's always a pleasure to have you, and you've given us the entire picture of the company, the growth prospects and industry, and how Gen Z and millennials habits are shaping up in the beer industry. It's always a pleasure to have you with us at NDTV Profit, and best of luck. So that's the management of United Breweries, interesting company, and also the stories, especially on the youth consumption trends, what Gen Z and millennials are thinking, and the company's expansion plan augurs well as well. But the question is, are the valuations attractive for this company or this industry? But for those interesting stories like this, stay tuned to NDTV Profit and keep watching KYC.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from facts and explain why listening better could mean living better. Only on NDTV Profit.
The news, Ayush.
Hi, thanks so much for joining in to our ongoing coverage of the Reserve Bank of India's Monetary Policy Committee's review of the monetary policy that has been discussed, of course, since this morning. The outcome of that meeting took place, and some of the headlines that you need to pay attention to. First and foremost, the Monetary Policy Committee as a whole voted unanimously to keep the policy rate unchanged. They've also decided to keep the stance neutral. What you're seeing on the screen is live visuals from Reserve Bank of India headquarters on Mint Street, where you're soon, in the next couple of minutes or less, going to listen to the Reserve Bank of India governor speak about the policy and take questions from reporters, including NDTV Profit's Piyush Shukla, who's at the event right now at the press conference. And I'm sure there's going to be conversations about...
Press conference, third for the financial year 2026-27. We have with us Governor, Reserve Bank of India, Shri Sanjay Malhotra, along with Deputy Governors, Shri Swaminathan J, Dr. Poonam Gupta, Shri Shirish Chandra Murmu, and Shri Rohit Jain. We also have with us Executive Directors, Shri Sanjay Kumar Hansda, Shri Indranil Bhattacharya, and for the first time, Shri Ravi Shankar. I also welcome my other colleagues from the Reserve Bank. Sir, there are 26 participants from the media. And before we begin, we have two housekeeping announcements. First, I request the media participants to please stick to only one question. I repeat, only one question, so that everyone gets a chance. And second, request everyone to please switch on the mic while speaking, so that those watching the live telecast are able to hear clearly. And once you have finished speaking, please switch off the mic. So with your permission, I will now call out the names.
Yeah, please do so. Even I want to emphasize that, please ask only one question. And in case you ask two questions, then I have the option to answer which question I will answer. So please be very sure which question you want to ask. And in case there are questions left, which I doubt there will be, we can come back. So don't think that your question will go unanswered, provided it's a different question which has not been asked by any of the 26 participants who are here. So kindly, let's follow this rule and keep it brief. So first question, as usual, is by Lata. And then, right?
Yeah.
So you are changing the sequence?
No sequence, sir. Yeah.
Okay.
Yeah. Thank you, sir. I'll request Ms. Lata Venkatesh from CNBC TV 18 to please ask the first question. Lata, please.
Thank you very much, Mr. Brijraj, Governor, and everybody. Sir, the market found your policy statement more dovish than expected. And their reasoning was, if you look at your inflation forecasts, it is above 5% for almost 1 year. That means well above your target by 100 basis points, well above the given target. As well, the real rate, therefore, becomes negative for a better part of the next 6 months or so. So is it that you are going to concentrate on core inflation, and when you deduct, you're looking at T-bill? If you take the T-bill 1 year ahead and deduct the 1 year ahead core, only then you come somewhere near a real rate of 1.4. I mean, are you going to be reconciled to a negative real rate or a very, very low real rate?
So let me first of all say, I mean, we are neither, dovish nor are we hawkish. We feel that this is the right policy rate for the given growth inflation dynamics that we are in today, and the outlook that we have projected ourselves. There is a lot of uncertainty, which will, of course, play out. The framework is very clear. I don't think there should be any confusion about the framework. Our target is headline. It's not core or core excluding pressure. It is the headline inflation, which is the target which has been given to us, and we'll continue to be guided by the headline inflation. And it will be our commitment, it is our endeavor to bring the headline inflation in line with the target over the medium term. As was mentioned even earlier. Now, why we look at core and core is because we need to know as to what the underlying inflation is and where headline or underlying inflation is going to converge going forward, because headline inflation, because of food and now because of fuel, because of the external shocks, can be very volatile. And so, as I mentioned even in the earlier press conference, that this volatility is not something that we would like to bring in even in our policy repo rate. So it's in the medium term that we target our policy, medium term target our headline inflation. And accordingly, we will take action as may be required, given the outlook and how the growth inflation dynamics play out.
Thank you, sir. We'll take some more questions from our left side before we come to this side. I'll now request Manojit Saha from Business Standard to ask his question. Manojit, please.
Thank you, sir. Thank you. My question is on FCNRB scheme. Is there an option for you to close the scheme prematurely before the deadline in case a certain amount of inflows coming? You may have a target in your mind. So because I'm asking this because there is a cost to this scheme because RBI is subsidizing it, and there is a view that the situation is now not as bad as 2013, where India was considered a fragile five. Forex reserves were only 275 billion as compared to 700 billion around. So that concern is there. So is there an option to close it prematurely once you get the amount of deposits which you may have in your mind?
We have got robust flows, as you have mentioned, and we do hope to get good, healthy flows going forward. As of now, there is no proposal under consideration to close the scheme prematurely. We will keep you posted on this.
Thank you, sir. I'll now request Anup Roy from Bloomberg to ask his question. Anup, please.
Thank you, sir. Sir, we have seen $40 billion being mobilized by the FCNRB scheme, and yet the rupee has not appreciated much. Just trying to understand what is happening there. Is it because you are squaring off your forward position and the dollar is not coming into the market? Can you please let us know what is happening there?
I think the underlying fundamentals of our Indian economy are very strong, as I have earlier mentioned. There can be an argument, as some people have made, that it is perhaps, on nominal or real effective exchange rate terms, it may be undervalued. There is a lot of uncertainty. It is quite possible going forward as the tensions and the conflict de-escalates, it is quite possible that the rupee may further strengthen. It has strengthened over the last 1 month or so. It has strengthened from 97 levels now to about 95 levels. So it has strengthened. And our policy has always been that the markets determine the prices level and the band. We don't pursue. We only target, we only intervene in case there is an excessive volatility, there are speculative pressures that are getting built in. And it will be our endeavor that the trajectory for rupee remains orderly and there is no disruptive movement or there is no expectation, self-fulfilling expectations getting built into the exchange rate.
Yes, thank you.
Thank you, sir. I'll request Hamsini Karthik from Money Control to ask her question. Hamsini, please.
Thank you, sir. Good afternoon. My question is also pertaining to FCNRB. I would like to understand if you could please help us with a geographical split of where this deposit flow has really come from and whether the deposit flow has ticked all the boxes in terms of BOP management, liquidity and forex from an RBI standpoint.
Yes, as of now, it has ticked all the boxes. You asked two questions, but they are related, so it's okay.
Thank you.
And your second question is geographies we don't have. We don't collect geographies. But the flows, as I said, have been robust. Our We had even before these measures a very strong and a comfortable external position. This further fortifies our external position, including the BOP.
Thank you, sir.
Thank you, sir. I'll request Ekta Suri from Z Business to ask her question. Ekta, please.
आज आपने अपनी पॉलिसी में एक स्टेटमेंट से बताया कि मार्जिन्स जो हैं बैंक्स के अब उतने शायद ल्यूक्रेटिव या उतने अच्छे नहीं हैं. आपने ऑफ कोर्स इंग्लिश में बोला था, लेकिन उतने बेटर नहीं है जितने पहले होते थे. तो सर, क्या सर आरबीआई ने इसे अकाउंट में लिया और इसी वजह से जो आपने बल्क डिपॉजिट्स पर डिफरेंशियल रेट्स का पेपर निकाला, क्या उसकी एक वजह ये भी है? और क्या अब आरबीआई इसको ट्रैक करेगा कि बल्क डिपॉजिट्स पे बैंक्स जो हैं जो किसी और तरीके से मार्केटिंग एक्सपेंस या किसी और तरीके से ज्यादा पार्टीज को फेवर कर रहे थे या उनको एक्स्ट्रा पैसे दे रहे थे डिपॉजिट्स के नाम पर, सर उसको क्या आरबीआई ट्रैक करेगा? और ऐसे ही बैंक्स जो हैं अपनी जब रिजल्ट्स आते हैं तो सर उसमें टेम्पररी फिक्स डिपॉजिट्स लेकर अपने कासा को इन्फ्लेटेड तरीके से दिखाते हैं, तो इसको आरबीआई किस तरह से लेगा सर? सर सब कुछ डिपॉजिट से ही रिलेटेड है.
3 क्वेश्चन आपने पूछ लिए एक में.
सर अंडर वन अम्ब्रेला ऑफ डिपॉजिट्स.
वो एफसीएनआरबी में भी उन्होंने 2 पूछ लिए. बल्क जो हमने इंटरेस्ट रेट के गाइडलाइंस जो आज निकाले हैं या पहले जो निकाले थे, आपने पहले वाले के लिए जिक्र किया, वो निम की वजह से, निम में जो कमी हुई उसकी वजह से नहीं थे. वो जो अंडरलाइंग कॉस्ट है डिपॉजिट की, जो भिन्न जो डिपॉजिट जमा करता है उनके लिए भिन्न हो सकती है, क्योंकि हमारे जो दिशा निर्देश हैं विशेष करके एलसीआर के लिए वो अलग हैं. तो उस चीज़ को ध्यान में रखते हुए हमने वो गाइडलाइंस निकाले थे.
So the other two parts
अगर नहीं आएगा वो क्वेश्चन, अगर कोई नहीं पूछ लेगा तो ठीक है, नहीं पूछेगा तो आई विल कम बैक, तो वापस आपके पास आएंगे.
थैंक यू.
अगर कोई पूछ लेगा तो ठीक है, नहीं पूछेगा तो फिर वापस आपके पास आएंगे.
थैंक यू.
सभी प्रश्नों का जवाब जरूर दिया जाएगा, बशर्ते समय की सीमा में रहे.
धन्यवाद सर.
Yes, Brij.
I'll now request Anurag Shah from ET Now Swadesh to ask his question. Anurag, please.
नमस्ते सर. सर, जिस तरह से आज एक बड़ा ऐलान किया गया है आपके द्वारा लोन इंटरेस्ट रेट कैलकुलेशन का, तो सर ये क्या उसी तरह का बड़ा ऐलान है जिस तरह आपने अभी मिस सेलिंग से जुड़ा हुआ एक ऐलान किया था, जो 1 जनवरी से नियम लागू हो रहे हैं, जिसकी काफी सराहना भी हुई, बाकी रेगुलेटर के द्वारा भी सराहना की गई. तो लोन इंटरेस्ट रेट कैलकुलेशन के नियमों से सर आम जो करोड़ों लोन लेने वाले लोग हैं उनको क्या राहत मिलेगी, कब तक इसके नियम लागू होंगे और किस तरह से आरबीआई एक दिशा निर्देश देगा जिससे लोगों को राहत मिलेगी?
ये जो इंटरेस्ट रेट के नियम हैं, इसका प्रमुख जो कारण है वो ये है कि विभिन्न जो हमारे रेगुलेटेड एंटिटीज हैं उनके लिए भिन्न भिन्न निर्देश दिए हुए थे. तो उसको युक्ति युक्त करने के लिए और स्टैंडर्डाइज करने के लिए हमने ये नियम निकाले हैं. और इससे ट्रांसपेरेंसी, पारदर्शिता वो भी बढ़ेगी, क्योंकि लोगों को सबको मालूम रहेगा कि जो ब्याज दरें हैं वो क्या हैं, किस प्रकार से सेट की जाती हैं. तो मुख्यतः ये एक रैशनलाइजेशन एक्सरसाइज है जो कि कंज्यूमर प्रोटेक्शन को और अधिक बढ़ाएगी.
तो लोगों को ये नहीं समझना चाहिए कि ईएमआई बदल जाएगी. ईएमआई तो उतनी रहेगी, लेकिन आपको
जी हाँ जी बिल्कुल
सही पारदर्शिता तरीके से अपना ब्याज और प्रिंसिपल समझ में आएगा.
Sir, can you please repeat in English, because that was to be my second question also. The market is very confused. What do you mean by all regulated entities? Will NBFCs have to declare EBLR? All those confusions
Will
are there.
NBFCs have to have external benchmark?
देखिए, वो all those details will be there in the in the draft guidelines that we are coming out with. So please wait for those guidelines. All the details are over there. It is not a major change, as I have mentioned to you. There is no requirement. There is no major change in requirement as you are referring to with regard to NBFCs and bringing them onto EBLR, etc. There is no major change. There is only a rationalization. Perhaps DG Shirish can further clarify.
No, you are right, sir. You have to wait for the circular to come out. Only thing I can tell you is no major change, and emphasis is on transparency and basically conduct related. So don't look at the substantive part, but nevertheless, wait for the circular. It will come out soon. Thank you.
Okay.
Yeah, thank you, sirs. Sir, we'll now take a few questions from the right side. I'll request Sangeeta Mehta from Economic Times to ask her question. Sangeeta, please.
Thank you. So this, your policy statement, you have said that transmission of policy rates have moderated. And now with the swap window being opened, we expect liquidity to surge, and it has surged and it might surge further. But do you expect banks to pass on the benefits of liquidity to the customers? Because banks are already talking about improving NIMs and things like that. So it's kind of wanted to understand that.
Liquidity will obviously help everyone. It was required, but let me mention that the liquidity may be in surplus only, for the very short term. It may peak, around in Q2, around September or so. And going forward, it should get absorbed because of our normal needs of the economy through increase in currency in circulation, higher requirement for reserves because of deposit growth. We also have some forwards which are getting matured. So overall, of course, it will help, but it is not something that is extraordinarily high liquidity.
Doesn't answer that. Would you expect banks to still have some?
As I mentioned, it is not substantial. So it will only help, at the very margins. It's not extraordinary or substantial over a very short period of time. And this is the kind of liquidity that we, even otherwise every year, through OMOs and other means, through swaps, we provide this kind of a liquidity. Now, a lot of it, of course, will depend on the amount of FCNRB deposits that we will get, but it should, more or less, it should get absorbed in the medium term.
Thank you, sir. I'll request Jasprit Kalra from Thomson Reuters to ask his question. Jasprit, please.
Thank you, sir. Governor, my question relates to succession planning at banks. There have been instances where banks have taken longer than a 6-month renewal cycle for the top leadership. Some other places, CEOs have left within one term. Given the ambition for India to have larger banks that can have a global reach, analysts have also pointed out that the tight grip on compensation, etc., for top talent at banks can have a limiting impact on the sort of talent banks themselves can draw. Do you see room to sort of review some of these rules that are in place and maybe relax some of them going forward?
There is no proposal as of now.
Do you not see a need as well, given the ambition to have larger banks?
We obviously have a need. We all obviously, would like and aspire to have more and more banks. But whether it is coming in the way or not, as I mentioned, has not been examined by us, and there is no proposal in this regard which is pending.
Thank you.
Yeah, thank you, sir. I'll request Piyush Shukla from NDTV Profit to ask his question. Piyush, please.
Good afternoon, Governor, DGs. Thank you, Grit sir. Sir, yesterday the government has made some amendments to the Payments Act. Now there is chatter that there could be, government may levy MDR on certain transaction, whether above 2,000 rupees, or it could use that on large retailers. With you have earlier mentioned how somebody has to bear a cost for this public infrastructure utility. I want to understand from RBI, will we look at transaction size? Will we target certain retailers? What is the strategy going ahead? If you can share some views on this front, sir. And last time, sir, you had said that the upper layer list of NBFCs will come out very soon. So how soon will it come, sir?
So, your first question I will answer is that it is very premature. Right now, the government is still carrying out the amendment. The costs have to be paid by someone. I mean, it's a public, we all want, that this public infrastructure should continue to strengthen, maybe become more efficient, etc. We continue to do that. That's our primary focus as of now. Let's wait and watch for further developments on this. I don't have anything more to add.
Will the user get charged, sir? Because if you're levying a fee on a merchant, eventually it passes on to customer. So the goal is to have 800 million transactions a day or so. So imposing a fee.
Let's wait. It's premature right now. But please keep in mind also that ultimately it is the consumer in some way or the other who's paying it already. So it may not be the same consumer, it may be, the general economy, and you don't get to see it directly, but already it's, to answer partly, your question, whether it gets passed on, and somehow, it's already getting passed on. It may not be directly on to the user pays principle, but someone is paying the cost. This is what I meant. Someone will have to pay the cost. I said this earlier, and even now I'm saying. So what is important is that we continue to invest and we continue to find the means, whether it is through MDR or other things. I think those are matters of detail. Let's wait and see how the situation evolves going forward.
Yeah. Thank you, sir. I'll request Ankur Mishra from ET Now to ask his question. Ankur, please.
Thank you, Brice, sir, and good afternoon, Governor. First of all, I just wanted to get what is the assumption on crude and rupee? Please don't consider it as question. To ask on, I want to understand your sense more on GDP front. In last to last policy, of course, the FY27 forecast was 6.9%, then it came to 6.6%, and now we are at 6.7%. Given in the first quarter itself, you are saying 7% growth is possible. Is there a scope of overall 7% growth for FY27 which is possible, considering the fact that the data which has come in the past also has been better than what was forecasted?
The 6.7% growth that we have estimate, the outlook that we have given is an estimate. And we have also mentioned that the risks are evenly balanced on both sides. We also give a fan chart to give, the relative probability distribution. So if you look at the fan chart, it will suggest that there is a possibility that the growth, to answer your question, there is a possibility that the growth may be 7 or more.
Yeah. Thank you, sir. I'll request
assumption, if you can
answer only one question. And this is not something, that we answer. This is internal to us. And these are market sensitive information, which we would not like to give.
I'll request Shayan Ghosh from Mint to ask his question. Shayan, please.
Governor, I wanted to understand. So in April, RBI had asked banks to submit a board-approved policy on AI-related cyber security resilience to RBI. And within a couple of months, we have seen a large bank facing a cyber incident where a lot of customer data was put on the public domain. Will there be a cost to such incidents in the banking sector when when banks fail to adhere to these guidelines, or they are not prepared enough to counter these attacks?
The IT systems of our major banks and big regulated entities are quite strong, robust. They have put in place checks and balances to ensure that they are secure. We have not only guidelines and regulations, we also have a supervision which is done very regularly. Any shortfalls or vulnerabilities are pointed out, measures to be taken to further strengthen the systems are suggested. They are followed up they are monitored, they are followed up to ensure that the systems continuously, while new threats and vulnerabilities keep coming up with new developments in the IT sector, at the same time, our banks and regulated entities also keep preparing and making themselves more secure and more resilient.
Thank you, sir. I'll request media persons to please ask only one question, as was informed earlier. I'll request K. Ramkumar from Hindu Business Line to ask his question. Ramkumar, please.
So there has been a divergence in the credit and deposit growth. Divergence between the credit and deposit growth, with credit growth outpacing the deposit growth actually by a huge number. So just wanted to understand, will this not create a situation where lending rates will go up, deposit rates will go up? And my second question is about whether the transmission is complete, monetary policy transmission.
So I answer your second question. Monetary policy transmission is about 80 basis points. It has moderated. It was about 90 basis points on the lending side. And so I would say, that it is more or less complete.
Thank you, sir. We'll now take the remaining questions from the left side. I'll request Madam Falakna Sayed from Deccan Chronicle to ask her question. Falakna, please.
Sir, according to reports, Paytm Payments Bank had around 800 crore of funds that are locked. Of that...
Okay, all right. So that's the word coming in from the press conference of the Reserve Bank of India to talk about monetary policy and, in fact, banking system regulations as well. We'll get you all of the highlights over the course of the day. For now, this is the wrap on the policy coverage for this moment. Lots more coming up after the break. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
ये लीजिए भाई, मैंने बनाया एक व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आपने ना बहुत। फैमिली विजिट करना अलाउड है? श्रीनगर तक अलाउड? एक हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
Hello and welcome to NDTV Profit. You're watching trending stocks from the NDTV Profit Suzlon studio with me, Hiral Datia and Sharad Dubey, who's standing at the profit pit. Sharad, an extremely volatile day of trade, though the MPC, the RBI policy kind of has been a non-event.
Exactly, you're right, Viral. It's largely a non-event when you talk about RBI MPC, and market has moved on. But a little bit of sell-off is coming, and look at that. We're at the end of, you could say, the day's low level. Also, Nifty Bank, that's where the sell-off has actually intensified, especially on the private names. That's also down almost 270 points. A little bit of gyrations were happening during the RBI MPC meet, but nevertheless, it's largely factored in, and there wasn't much surprise as well. But let's look at the key factors, what you should be watching out for, and the traders are suggesting a consolidation can be there going ahead, but you never know what happens in the closing session. RBI MPC has kept its rates unchanged. Of course, concern might come in, especially on the minutes when we start reading that. Nifty Bank is very volatile also. We can see up moves also, down moves also, both sides it's happening, but it's in a range. Also, let's look at the other key factors, and this is of course strong buying in the realty segment. This is a divergence, especially because it is interest rate sensitive. Auto also on the other hand is seeing a good buying. The global risk of sentiment is reducing, and small caps, interestingly, look at that, that's doing really well. So value based buying is definitely there on the cards, especially on the earnings where the reactions are happening. And speaking of earnings, three important earnings, Power Grid, Oro Pharma and Biocon, are expected to come out with the results. We'll be tracking them. And also other group of earnings are also there, which are the larger ones, PB Fintech, Navin Fluorine, Cummins, which we'll be focusing on. So this is the entire picture for the day. But there's a very important impact of cash, that's which has been actually hunting or actually hurting the entire market ecosystem over the last two trading sessions. And today itself also we might expect some kind of stress. But to understand more, is this stress going to other players? We are joined in by Nimit. Nimit, please come. Nimit, is there a little bit of panic coming in amongst the broking community or the ecosystem right now?
Well, I don't think it's panic, because the sources that we speak to, especially the regulatory sources, they say that actually the problem here is not about the volatility, it's about the participation. Right. And once the pool becomes deeper, right, and we see more meaningful investor participation here in this SAS period, then there's going to be no volatility, and this volatility will reduce over time. In fact, they say that there are no plans to modify the current SAS framework that's been set out, and the sources within the regulatory framework say that the design and the technical architecture here is robust and it matches international standards as well. The simple message here is that over time, as we see more participation and widening participation, the volatility is naturally expected to just settle down.
Fair enough. Thanks a lot for that. And of course, the main thing is give it some more time. Some teething issues are coming in, and once the volumes picks up, then maybe the pricing, we won't see so much of that move. Over to you, Hiral.
Thank you so much for that. It's going to be interesting how this pans out, because this closing price becomes absolutely important from an F&O settlement index calculation, mutual fund NAV, as well as ETF rebalancing aspects as well. And that's the reason why, you have the regulator who's coming out and saying that higher amount of participation is what is needed when it comes to cash, for cash to settle and not see these kind of gyrations which are coming in as well. So that's where, in fact, we will be constantly giving you updates in terms of how cash is panning out for the Indian markets right now going forward. But moving on, time for earnings. Alembic Pharma, that stock is buzzing in trade, and this is on the back of a good set of numbers that have been reported, mainly driven by US and the API business. The stock seeing gains of a little over 2%. To understand the quarter gone by and what's lined up going ahead, we are joined by G. Krishnan, Chief Financial Officer at Alembic Pharmaceuticals. Mr. Krishnan, welcome to the show, and always a pleasure to speak to you. My first question coming to you is, overall a decent set of numbers, wherein a 25% revenue growth, profits have seen an uptick of around 12%. So there has been broad-based growth across businesses as well, or across segments, I would say. How are you looking at the quarter? Has it met your internal expectations?
Yes, thanks for having me here. And yeah, it's been a good start for FY27, and we had reported about 26% consolidated revenue growth, and this growth is supported. It's broad-based growth coming across the businesses. India branded business grew at about 7%. International generics came in at about 37%, and API grew at about 33%. And more specifically, US also witnessed a growth of about 49%. And this growth is actually, coming from not only from new launches. So we have had some pretty good new launches in the last quarter. In addition to that, the volume growth also has supported in US, and this volume growth is coming from the products that we launched in the last 12 months, and also from the existing products that we've got. So pretty much it is broad-based growth. And in addition, while the profit growth also is good, and it remained resilient. Even after considering the investments that we have made in R&D and the US branded platform that we are building. So we reported a EBITDA growth of about 21% and a profit after tax growth of about 12%. So overall, the quarter has given us good visibility on growth momentum, and particularly in US generics, while we have continued to maintain our investment priorities, which remain unchanged.
That's interesting. Now, Mr. Krishnan, the question that I have for you is then a 26% revenue growth, a 49% jump in terms of US sales. So would you describe this as a beginning of a new growth phase for Alembic, or is FY27 likely to be the peak of the current cycle?
Yeah, so Q1 had some good contribution from new launches, and the broader point is that then execution is improving across the platform, and especially when you look at US generics, API, and animal health. So it's broad-based execution that has supported the growth, and more specifically in US, when you look at the contribution from new launches, in addition to that, we have seen volume growth as well, right? So this gives us confidence that the momentum is more execution-led rather than purely any one-off, right? And we also have a good pipeline of new launches coming up in the rest of this financial year, and which is about some 15 odd products that we intend to launch. And overall, we have got about close to 289 ANDA filings that we have had in US, and about 185 product launches that we have already done. So it's more of a platform effect and the impact of R&D investments that we have done over the last few years. So we believe that this growth is sustainable, and also, that gives us the confidence that, we have upgraded our guidance for US from low double digit to mid teens. Now we are confident of doing mid to high teens growth for FY27.
Sir, one thing on the margins front, on a year-on-year basis, there has been a compression of almost 100 basis points. This is on a calculated basis. Do you think this margin pressure could be there going ahead in the couple of quarters, or is that bottoming out?
So I would like to split the margin impact into margin performance into two aspects. One is the core operating performance, which has continued to deliver good leverage driven by volume-led growth. We have seen good improvement in capacity utilization across the facilities. So the underlying margins have improved over the last year. And what has happened is the investments that we have done in R&D. R&D investments have grown about 29% year on year. And also we have invested in US branded platform, right? So which is more of a soft launch that we did in the last quarter, and we see that scaling up over the next few quarters. So the investments that is strategic planned has we are in the investment phase, which is what has marginally impacted the reported EBITDA margins. So the underlying EBITDA margins are really robust, and we are seeing operating leverage expanding as we go forward.
And Krishnan sir, the animal healthcare segment has done well. This is a very growing segment. How do you see this panning out? Any kind of expansion or any kind of investment plans are there for this segment?
So the animal health it's part of the India branded portfolio that we have got. So close to 20 to 23% of the revenue within the India branded business is coming from animal health, and consistently we have delivered growth of about 20% plus in animal health in the last year, as well as we have continued to maintain the growth trajectory in the first quarter. We believe there is opportunity existing both in farm animals, poultry, and also we have begun our journey in the companion animals, and there is good opportunity that we believe we can unlock as we go forward. Our focus will be on expanding the product portfolio, building the momentum with the existing field force, and also strengthening the on-field execution, which we believe, I think there is good momentum that we would like to continue to maintain on animal health.
Okay. My other question coming to you is now, everyone's watching out for the margin recovery story as well. With the way the first quarter has panned out, do you think that the operational leverage will finally start showing up meaningfully in FY27 itself, or do you think there is a potential of it moving to the first half of FY28 where material benefits will be shown?
Yes, operating leverage is already playing out in the first quarter itself. And if you look at the R&D pre-R&D EBITDA growth, that is much better than the reported EBITDA growth. And the reported EBITDA also absorbs a good amount of the ramp up in US branded platform that we are building, right? So that costs is already absorbed today, and the margin expansion is helping us absorb that incremental investment that is going into building the platform, as well as the additional incremental R&D spend that we are seeing. So the operating leverage is already happening as we speak, and we believe that the overall margin profile for the current financial year will continue to improve as we see the US branded platform scale up, ramp up in terms of operations, and then start contributing to the profit.
Okay, so lots to watch out for, but an interesting quarter. Thank you so much, Mr. Krishnan, for joining, and always a pleasure to speak to you on NDTV Profit as well. The stock's in gains of a little over 2% as we speak. But moving on, Motherson Sumi Wiring. Let's pull up that one on the screens. A strong 37% jump in revenues is what we've seen. However, soaring copper prices and wage hikes is what has dented margins, keeping profitability growth largely flat. That stock seeing gains of 3.5% has cooled off from the day's highest levels as well. But let's discuss the quarter gone by with Gulshan Pahuja, CFO, and Anurag Gehlot, COO at Motherson Sumi Wiring India Limited. Welcome to the show, gentlemen. Always a pleasure to speak to both of you as well. Overall, strong revenue and volume growth. However, as we mentioned, margins have remained under pressure. And yes, it's copper prices, wage hikes. The greenfield project ramp-up costs also, if I'm assuming correctly, are the ones which have dented margins. Do you think this is the trajectory that you are looking at in terms of FY27 as a whole, or do you think this is just a one-off and things will improve from here on?
I think good afternoon. First of all, thank you very much for taking us on NDTV Profit. As you rightly said, it's a strong performance in terms of revenue as well as in EBITDA. Obviously, we have done 3,407 crores with around 37% growth year on year, and where the market has grown by only 17%. So we are outperforming the market. Obviously, coming on the margin side, where we are seeing that the commodity prices, which is copper in our case, has gone around 53% year on year, and on sequential basis also, on quarterly basis also, they have increased. Obviously, that impact is there, and the abnormal manpower cost, which has increased because of the minimum wage impact in the NCR region, which has given a little impact on these. But as commodity prices are on the lag of major customer with the 3 months and rest of them for the small customers for the 6 months basis. So I think that recovery will happen over a lag of a quarter or a 6 months period. As far as manpower costs are concerned, obviously we have to do a lot of upskilling and to improve on the shop floor, because these cost increases in the past years also. But exceptional high, we always go back to the customer, and we have seen in the past as well that customer has understand this pain, and they have discussed this with us on to giving the claims and giving us other sort of alternate businesses to at least to nullify these impacts. But as Motherson Sumi Wiring is always a ROS focused company, you must have seen in the previous years also we are performing more than 40% ROS. And for this year also we are keeping a very good focus onto that. And if this year continues with the plan what customer has given, the forecast given to us, I think we should be doing at the end of the year.
Okay. So everything said and done, will you be able to pass on the increase in costs to protect your margins in the coming quarters?
As I advise that copper, the commodity prices, they are as per the terms with the customer. So that is a lag of a quarter or a 6 months as per the agreements with the customer. And for the manpower cost, which are exceptional high, as I suggested that in the past also we have gone to the customer and they appreciated our pain. So this year also we'll be discussing with our customer on these areas, and we'll see how customer are going to help us in this scenario.
Gulshan, from your side as well, what's the outlook looking like in terms of business if you have to look at the different segments, and where are you seeing heightened demand? Because the sales numbers, if you have to look at that aspect, pretty strong even in the month of July. And obviously that trickles down to the OEMs as well to some extent. But in the next 3 to 4 months, if you have to look at how the demand is panning out from OEMs, what are you picking up and what is that telling you for FY27?
Definitely, it's going to be a good. I think July went well, as you have mentioned, in terms of the automotive industry also. And as far as our growth is concerned, the growth is phenomenal in this quarter. I mean, it's a very historic in the company history as well, outperforming the industry by, significantly. Where the industry grew by 16%, 17%, we have grown by 37%. Even if you take out the copper inflation, we still have a 30% growth on our side. And July also went well. I mean, you have seen the industry numbers also, and as far as our performance is concerned, July also went well. So we are quite hopeful that the momentum which was built in the later half of last year was continued to be seen in this quarter gone by. So we are hopeful that we are entering into an era in the industry automotive era where the growth is not going to be, at least not going to be a degrowth. It would be sustained at the same levels, if not seen any multiple factors. So I'm very hopeful by this year, and we would be at a very good stage in terms of, obviously, target is to outperform the industry in all aspects.
And in terms of FY27, I'm coming back to the question, Gulshan, in terms of revenue growth versus profitability as well. Barely positive, right? At what point does growth start translating into meaningful earnings growth if an investor has to look at it? And two, there is confidence that you will probably outpace what the industry is doing, like the way you've delivered in terms of the first quarter. So should investors brace for good margin recovery towards the end of the year, or do you think it'll remain where it is?
I think the last year I can understand, because when the greenfields were going in operations, but we maintained in the last quarter that now they have reached a stage where they have started contributing us, right? So from this quarter onwards, directionally we are going in that direction only. But we need to understand one thing very importantly, that we are going in a very cost challenging environment right now, I mean, in the beginning of the fiscal year, nobody has anticipated that this much increase would happen in the minimum wages. So we have been impacted by very significantly in this quarters. Of course, we have our discussions on with our customers. So some pass-through would be there in the coming, and you will see in the coming quarters as the discussions concluded. But I would say if you just see at the normalized margins, I think we have already improved so much year-on-year basis also and quarter-on-quarter. So actually, I think we already tread on a path where we need to look at the profitability which were there in earlier years. Second aspect, which is very important to note, that despite we had been were able to deliver, the more than 40% growth in the past year, right? And in fact, since the beginning of the Congress company in that way.
Okay, I think we'll have to reconnect as well. I think the audio is giving us some bit of glitch, but an interesting quarter that the company has posted so far, and lots to watch out for. Thank you so much, gentlemen, for joining in. So that's the management of Motherson Sumi Wiring as well, seeing gains of 3.5% as we speak. But the next set of numbers, Glenmark, the earnings have beat estimates, and this is mainly powered by the India business. However, the stock not really doing too much, down 0.2%. My colleague Mahima caught up with the management to discuss the quarter gone by. Let's listen into that conversation.
And welcome. You're watching NDTV Profit. I am Mahima Vajrajani. In Glenmark Pharma is in focus on the back of its Q1 numbers, and overall, it was a strong a strong showing, in fact, from the India and US business. Margin guidance also largely maintained. To understand as to how things have shaped up, how they're going to look like going forward, we're now joined by Anurag Mantri, who's the Executive Director and Global Chief Financial Officer of Glenmark Pharmaceuticals, joining us now. Thank you so much for taking out the time, Anurag. I'll start by asking about the US business, because that has delivered a sharp recovery this quarter, excluding, of course, the license income. But how should investors think about the underlying growth trajectory for this one, for the next few quarters especially?
Overall, let me first talk to overall business this quarter. If you see, we have the revenue growth of 23%, and even if I remove the IGI income-wise, that revenue growth has been almost around 18% plus. So it's a very strong quarter for us. And even, but if you see, EBITDA has grown up more than the revenue, which shows that our quality of earning is also improving. So, and this growth is also very broad-based this quarter. So we have seen across, like India continues to grow very strongly. US has grown very strongly. Entire emerging market, especially LATAM, MEA, and Russia, CIS have contributed double-digit. All contributed double-digit. And Europe can also continue to grow. So across all the geographies, we continue to do well. So, as I mentioned, that the EBITDA is growing faster than the revenue, so which is showing that the quality of earning is improving considerably. So in terms of our mix, in terms of withstanding the global pressures on the cost, which includes like, if you see the quarterly, this quarter, like across the thing, API cost is increasing, packing material cost is increasing, logistic cost is increasing, but despite that, we have been able to hold on to our margins of around 20%. So overall, this quarter has been good. But specifically in US, if you see that we had a good respiratory launch. We had launched fluticasone 44 mcg last quarter, and this is going very well. This was the exclusivity period, and which continued to do very well. And then also we have we are relaunched the Ryaltris with our own commercial franchisee. So that is also doing will also contribute to this year. And besides that, Monroe also has been restarted. We relaunched the Fulvestrant from Monroe. So that's the first commercial launch from Monroe, and it will start contributing meaningfully from FY28 onwards. So Monroe facility in US will also start contributing to that. And this year, H2, we are actually again launching the two we are expecting the two new approvals, which is one was fluticasone 110 and ipratropium. So which will should also contribute well into our overall revenue mix. So we expect a very strong year for US, India, LATAM, across the thing, and also Europe will continue to do also well for us.
All right, but Anurag, from the prospect of guidance, just for the sake, if you have any internal guidance that you have in terms of growth targets for the US business.
So US business, we are expecting this year to be a $430 million plus of the revenue in this year, which is a very significant number as compared to the previous year. And we'll continue that momentum because US, we are seeing multiple launches, respiratory injectables across that. So we are seeing a good growth profile in US this year.
Got it. You talked about multiple respiratory approvals in the second half of FY27. Just want to get more sense which product that you've planned to launch will have the biggest commercial opportunity. What is the TAM looking like, and how important are these launches going to be for FY28 earning targets?
So if in US particularly, if you see fluticasone 44 mcg, which we launched last quarter, it's continue to do well for us. Ryaltris relaunch is also actually getting on track. So I think the Ryaltris is this year, because we were not doing much in Ryaltris last year because through the partner one. Now we have taken that relaunch. We have relaunched the product with our own internal things. So I think that will continue to do well for us in US. And the next half, we are expecting two more new approval. One is fluticasone 110 as well as the epratopium, and so that also will continue to do well. So all these products will have a good contribution overall this year in our this year of US revenue.
Okay, so that's with regards to Glenmark Pharma. No major moves coming in on the stock. However, markets continue to remain volatile, and we're nearly at the day's lows in terms of Nifty 50 and a lot of counters that are dragging markets lower today. But completely out of time. A thank you from Sharad, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit from the NDTV Profit Suzlon studio. We'll be right back.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी। ये आपके लिए।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
सरसों से सरसों।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from facts and explain why listening better could mean living better. Only on NDTV Profit.
the news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message.
The RBI has kept the repo rate unchanged at 5.25% while retaining its neutral policy stance. The MPC's decision was unanimous, with key liquidity rates also left unchanged. Meanwhile, the RBI has also raised its FY27 GDP growth forecast to 6.7%, citing a resilient domestic economy. The central bank also upgraded its first half growth estimates, signaling confidence in sustained economic momentum. Meanwhile, Nifty and Sensex slumped to the day's lowest points despite subdued crude prices. Realty, auto remain resilient. FMCG and bank, meanwhile, on the back foot. And oil prices extend their losses for a third straight session as hopes grow for a deal to reopen the Strait of Hormuz. Positive signals from the US, Iran and Qatar ease supply concerns, also adding some pressure on prices. And Castrol India shares move higher after the company reports a strong June quarter performance. Net profit surges more than 42% on a year-on-year basis, boosting investor sentiment and keeping the stock in focus. PTC India reports a sharp drop in June quarter profit, with net earnings falling nearly 50% on a year-on-year basis. Despite the weak performance, the company surprises investors by declaring a robust interim dividend of 23 rupees per share, which reflects a 13% yield. Good afternoon, you're watching Lunchtime Trades with me, Shreyanshi Singh, and this is the show that gets you a roundup in terms of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at the markets first things first. And you know, when you talk about the markets, right now you're looking at the Nifty as well as the Sensex very close to the day's lowest points as well. Whether you talk about that 98 odd point downtick coming in for the Nifty or the Sensex, which is about 30 odd points lower as well. Even when you talk about the small cap and mid cap indices, slightly a better picture that you're looking at. So just about slight outperformance coming in for the small cap index, which is up about 100 odd points, and mid cap also just about 50 odd points higher in the green right now. When you talk about the entire sectoral picture, that's quite mixed right now, but still very much in favor of red as well, because you do have Nifty, bank, FMCG, media, financial services, pharma, energy, defense, as well as IT. Also on the back foot just a little bit. What's doing quite resiliently for itself is realty, auto and PSU bank in terms of some of those segments that are doing decently for themselves. So when you talk about some of the top losers from within the broader universe, something like a CE Infosystem or a Kalyan Jewelers reacting to its numbers with that 3.5% downtick also coming in. Let's also talk about some of the Nifty 50 losers and gainers as well. So no surprises there in terms of some of your IT names also making it to the top of that list in terms of losers at least. So really 1.7% loss coming in for something like an HCL Tech, TCS, Apollo Hospital. Some of your financial services counters, the likes of Jio Financial Services or ICICI Bank, Axis Bank, HDFC Bank for that matter, also on the back foot. So across the board, there's some pain when you talk about select few sectors, and just about a few sectors that we've mentioned earlier, just holding on to a bit of resilience as we speak. Speaking of resilience, let's also talk about Nifty 50 gainers as well in terms of the stocks that are doing quite well for themselves. So it's actually something like Grasim Industries with that 2% uptick coming in. L&T also 1.5% uptick also. And you know, when you talk about something like a PTC India as well, that particular stock is doing quite smartly for itself. And you're looking at the dividend, which is about 23 rupees per share as well, 7.5% there about uptick coming in for that particular counter, largely on the account of that dividend surprise, because the profit has actually slumped about nearly 50% on a year-on-year basis. It's actually something like a Castrol India also moving higher. after the strong first quarter as well. But let's also move on and talk about the dry bulk shipping index as well, and that's where you're seeing some action really happening in terms of milestones as well. Global shipping costs continue to climb, with the Baltic Dry Index also hitting a 3-week high. The rates were largely driven by a sharp jump in Cape-size vessel costs as Typhoon Dolphin really disrupted some of those shipping areas near China as well. So freight rates, of course, have also been supported this year by continued disruptions linked to the Middle East conflict. So it's actually a culmination in terms of both of those things as well, and that's something that you're looking at. But let's also shift our focus to the key talking point this afternoon, and it's of course the Monetary Policy Committee of the RBI, which left its policy repo rate unchanged at 5.25% for the 4th straight instance. In fact, this status quo largely, of course, being penciled in also, but follows the central bank pausing on making any moves when it comes to rates on February, April and June this year. In fact, Piyush is joining in with all of those very important key takeaways as well from the meet.
RBI Governor Sanjay Malhotra has concluded his MPC statement, and here are the top 5 key takeaways from his statement. First, the repo rate remains unchanged at 5.25% and the stance remains unchanged as well at neutral. The key consideration behind the decision was the ongoing West Asia conflict and its spillover effects on India's economy. Number 2, the RBI has revised its forecast on GDP growth. The RBI has revised upwards the GDP growth forecast by around 10 basis points and now expects the FY27 GDP growth to be 6.7%. Number 3, the RBI has tweaked slightly downwards its forecast on inflation by 10 basis points, and now the RBI expects CPI to stay at around 5% level in FY27. This is of course because the crude oil prices have cooled down in recent period. Number 4, the RBI's liquidity measure, governor said that the RBI will continue providing durable liquidity in the banking system. In fact, since the last Monetary Policy Committee meeting, the banking system liquidity has stayed in over 1 lakh crore, that sort of a range, and the call rate have remained anchored near the repo rate. Short-term yields and government bond yields have also eased after the government's measures and the combined measures that the RBI and government has taken over the last couple of months. And finally, RBI has also said that it will, introduce fresh licensing for urban cooperative banks. This measure, we have not seen the RBI granting fresh licenses over the last 2-decade period. So this is a substantial development, and NDTV Profit had earlier also exclusively reported how the RBI is willing to now open the, licensing framework for UCBs.
Alright, then thank you so much, Piyush, for joining us with that. Let's also recap in terms of the conversation that Piyush had with the RBI governor as well in terms of charges on UPI transactions. Let's also go across and listen in to a snippet of that as well.
Sir, yesterday the government has made some amendments to the Payments Act. Now there is chatter that there could be, government may levy MDR on certain a transaction, whether above 2,000 rupees, or it could use that on large retailers. You have earlier mentioned how somebody has to bear a cost for this public infrastructure utility. I want to understand from RBI, will we look at transaction size? Will we target certain retailers? What is the strategy going ahead? If you can share some views on this front, sir. And last time, sir, you had said that the upper layer list of NBFCs will come out very soon. So how soon will it come, sir?
So, your first question I will answer is that it is very premature. Right now, the government is still carrying out the amendment. The costs have to be paid by someone. I mean, it's a public, we all want, that this public infrastructure should continue to strengthen, maybe become more efficient, etc. We continue to do that. That's our primary focus as of now. Let's wait and watch for further developments on this. I don't have anything more to add.
User get charged, sir, because if you're leaving a fee on a merchant, eventually it passes on to customer. So the goal is to have 800 million transactions a day or so. So imposing a fee.
Let's wait. It's premature right now.
Alright, then there you go. So that's really a snippet coming in terms of that conversation as well. Premature to talk about some of those, UPI transactions as well. That's the word coming in here. Let's also move on and talk about oil extending some of those losses. And you do have Brent slipping below that $79 a barrel level as well. Let's also pull up the oil prices and see what they're up to just at the moment as well. But when you talk about the broader trend, the losses seem to be deepening amid the diplomatic progress, as you can see on your screens. Brent very much below that $80 a barrel level. When you talk about WTI as well, below $76 a barrel at the moment as well. And lots of factors to really watch out for, and we'll get to that in just a bit. Before we do that, let's also quickly take a look at gold prices as well. Bullion also climbing above $4,130 an ounce as well. And silver also rallying over 2% on optimism. So really a lot to discuss when it comes to this conversation. Kunal Shah, Head Commodities Research, Nirmal Bang joins us on the show right now. Mr. Shah, a very good afternoon to you. First things first, just wanted to try and understand what you think about what's been happening with oil prices. It's really just been breaching some of those key support levels as well. What are the next levels that you're keeping an eye out on?
I think for WTI, the next level to watch out is $70 per barrel. And looking at the way the things are placed, right now, it seems that the likelihood of peace deal taking place between the US and Iran is high. Considering whenever we have seen the bond yield shooting up, generally Trump's always try to make a deal. And that is what has happened lately also. I think it's US is the one who wants deal more badly than the other counterparty. And looking at the scenario, because of this narrative, we are going to see some more fall. MCX crude oil can decline and test levels of 6,900. But we are not very bearish, and we are expecting, $70 will be again good levels to rebuild your inventory. So I think maximum downside is still $70, and overall it looks definitely slightly bearish in a shorter term.
Absolutely, and US President Trump really losing face as well with the war going on right now. And if you've been tracking gasoline prices very closely as well, that should also, perhaps indicate as to why that is really happening. Speaking of his commentary as well, just quickly wanted to highlight one of the factors that is very important for crude prices, right? You do have him suggesting that a breakthrough might really happen within the next 48 hours. So if that does happen, and that de-escalation, and a very big one at that, really does happen, what kind of price levels are you then penciling in as well?
I think, like I said, maximum is $70 downside, because what will happen is that the kind of inventory drawdown what we have seen from US, China, and Japan, these three countries will definitely try to make up for the inventory losses what they have witnessed in last 3.5 months, 4 months. So I think $70, and they will again, start buying crude oil, fill up their reserves, because if this escalates again, then also it is a problem. So whenever you see a dip towards 70, I think these are the countries which will be buying oil. So strong floor at $70 to $69. I don't foresee that prices will not sustain below those levels.
Right. Yes. Absolutely, point taken there. Just very quickly wanted to highlight in terms of gold and silver as well. You've been seeing quite a bit of rally, especially when you talk about silver. From a fresh buy standpoint, what you're looking at and what you're penciling in terms of the trajectory of prices here?
I think the trajectory is definitely on the upside. The rising US debt, US will hit in some time $40 trillion debt, rising debt. Second, with whatever is happening with the bond market, it is indicative that whenever there is a sharp surge in bond yield, they have to print money and bring down those yields. So this is also positive for gold. Third, another round of monetary debasement is on the cards. US is likely to, print with different label going forward, liquidity management, or they will use word yield curve control, something like that, and then print more. From the 1st of Jan till now, the US Fed's balance sheet have expanded by more than $240 billion. So that shows, that whatever downside in gold, what we are witnessing is a buying opportunity.
Absolutely, and thank you so much for taking time out and joining us this afternoon. About $2 trillion per year is the kind of rate that, very staggering rate at which US is really adding debt as well. And that's the entire backdrop that you have had in terms of gold prices going forward. Let's also move on and talk about RD Industries as well. That's very much in focus on the back of raising 127,000 crore from anchor investors. Let's also get in some bit of perspective from the management. Nikunj Agarwal, whole-time director, RD Industries, joins us on the show right now. First things first, Mr. Agarwal, thank you so much for taking time out and joining us on the show. First things first, just wanted to try and understand, in terms of Amara Raja, right? It contributes over 40% of your revenue. How do you then plan to reduce some of that customer concentration over the next 2 to 3 years then?
Hi, good afternoon, first of all, and thanks a lot for inviting me on the show. I am Nikunj Agarwal, whole-time director of RD Industries. We've been growing at 58% CAGR year on year. We've added a lot of new customers in the past few years. As on date, it stands at around 50 plus customers that we have. And we feel that the customer concentration has down from 70% to 40%. Still, in the coming years also, we feel that it's an inherent part of this industry that there are few large customers, being a commodity business. So we always focus on having key anchor clients and then followed by multiple other customers, basically. It's kind of a strategy that the industry sort of follows.
Absolutely, and point taken there. Just also wanted to get a little more color when it comes to your raw materials as well. You do have somewhere close to 87% of raw materials currently imported, right? So do you see scope to really increase domestic sourcing as well? Is that something that you're looking at? And what could that really mean for the margins then?
So broadly, we're pretty, even though import is our focus, we've still been trying to increase our domestic procurement of batteries, and with the government's tailwinds for the EPR rules and the BWMR rules, we really feel strongly going forward on the domestic sourcing that will pick up when those rules are properly implemented. Already to a large extent, they've started being implemented, and we are seeing good traction in the domestic markets where battery manufacturers are also approaching us for recycling the batteries or for EPR credits against the batteries that we've recycled from the domestic market. So we're pretty strong on the domestic market also going forward.
No, absolutely, and just about the EBITDA margins as well, they've improved from 6.1% to 12.6%, and that's just in a span of about 2 years. How much further headroom are you then foreseeing, and what do you think are the key drivers except for the ones that you've mentioned?
So we've been ramping up ourselves, from FY24, where we made only 32,000 tons of production, and now FY26 we closed at around 70,000 tons of production. So production has doubled for us. We've increased our capacities from 54,000 to 156,000 tons now as of May 2026. So we feel it's like a combined effort of multiple things, from scaling of the capacities. Our portfolio has had a healthy contribution from value-added alloys like lead antimony alloys, lead calcium alloys, and it's a strong portfolio that we're building, and it takes time for OEMs to approve these alloys. So we feel strongly that we'll sort of be able to sustain these margins.
And right before we let you go, just wanted to get some more color in terms of exports as well. They've grown significantly over the last 2 years. Which geographies or markets are you then, likely to drive the next phase of export growth in? Could you just chalk up that entire list for us?
So our key focus remains Southeast Asia when we're exporting. As of last year, we exported around 40% of our revenue was coming from exports. That's roughly about 465 crores of top line. You're right, we're growing a lot in the export side. I'll also highlight how RD Industries brand RD-led 9997 is now LME brand approved as of December end last year. So which has given us a major edge going forward, as well as it's one of the very few companies in India to have this registration, along with the already existing MCX approval that we have. And countries like Korea, Japan and Singapore are countries where they really value long-term relationships and these LME approvals, which puts us on the global quality standards basically.
Yes, no, absolutely. And thank you so much for taking time out and joining us this afternoon, Mr. Agarwal. So there you go. That's the entire expansion plan that you're looking at, the roadmap going forward after this particular fundraise as well. So you do have about 127 odd crores that they have raised from anchor investors ahead of the IPO, out of which 220 crores is going to be used for, in terms of the IPO, it's the 220 crores that's going to be used for the working capital alone and 20 crore rupees to be utilized for the debt payment as well. But let's also move on and talk about yet another counter coming in from the primary market. Molbio Diagnostics IPO is also set to open on August 10th for subscription. You do have Puneet, who caught up with the management of the company in terms of their expectations from the IPO. Let's go across and listen in.
I'm now being joined by Sriram Natarajan. He's the Executive Director and Chief Executive Officer of the company. Also being joined by Indranil Borkakoti, President Corporate Strategy as well as M&A and Investor Relations at the company. Gentlemen, both of you, thanks so much for joining in today. My first question largely being that despite having diagnostics in your name, you're nothing but a traditional diagnostic company. You do, of course, a lot of point of care. You have a platform which will help essentially in tests. You sell test kits. So just for the benefit of our viewers, if you can give us some perspective of the company and what it's all about.
Yes, Puneet, thank you very much. So just to introduce the company, so Molbio Diagnostics is a completely innovation-driven medical products company where we design, develop and manufacture high-ended, high-quality in vitro diagnostic platforms which can be decentralized and taken to the lowest levels of the healthcare chain. Why I'm saying decentralized is because traditionally most diagnostics are very highly centralized, and so the access to diagnostics to people is very limited. So we are trying to ensure that we're able to reach diagnostics to all the levels of the chain, including the remotest and primary level. This we are doing through a flagship product currently called TrueNat, which is a multi-disease platform where we can test for 30 different diseases on the same machine once it is introduced in the healthcare chain. And as you know, we are focusing on infectious diseases. And infectious diseases, are mostly curable if they are diagnosed early. But still, millions of people globally are dying because of these, just because they don't get diagnosed in time. So that is the problem we are trying to solve. And one example I'll give you is in the area of tuberculosis, where about 1 million people every year die of tuberculosis globally. In India, about 300,000 people plus are dying of tuberculosis, which means almost one person is dying every minute of tuberculosis in India. That's the kind of impact that we are trying to create, to see that these people can get diagnosed early, they can be put on treatment, so that we can first of all cure them effectively. At the same time, ensure that they don't spread TB to more people. And that's the only way you can go towards elimination programs where you can eliminate these kinds of diseases completely. So that is the strength that we have, and our technology is completely patented globally in about 110 countries. We have close to about 200 patents already. We have a very strong R&D team. So the R&D is housed in a company called Big Tech Laboratories, which is a fully owned subsidiary of Molbio. And apart from TrueNat, this R&D team is working on many more technologies that will come up as we go along. And so innovation and trying to bridge the gap in the healthcare system and try to offer solutions that can impact the global population is the mission of the company, and that's what we will continue to keep doing.
Thank you, Puneet, for having us here. And also just to add to what Mr. Sriram said and to your question about the IPO, given that we are an innovation-led company, R&D is the heart and soul of our business. So of the 200 crores that we're raising, about 105 crores is going to be invested in R&D, where we'll be setting up our own center in Bangalore, since we operate out of a leased premises currently. 72 crores will go towards automation. We have our plants which manufacture the reagents or the consumable kits, test kits out of Goa. We will be spending about 72 crores at those plants there to bring about further automation and efficiency in the system, so that we can also work on more cost effectiveness in terms of our manufacturing process.
Got it.
The
So
balance, as you know, is an offer for sale.
right. I saw that roughly you did about 1,400 crores in revenue in the last year, and that has seen a very good 40% growth from the previous year. Revenue from sale of devices as well as test kits, those are the two key main revenue drivers for you. But if you can give us some perspective of who are your essential clients, because you mentioned in your RHP that 56% of your revenue comes from central government, 23% from the state. So are these government-backed hospitals that you sell these test kits and devices to at this point of time?
So let me come here to say that we cater to both the private sector and the public health space. In the private sector, we cater to the laboratory segment, so all the pathology laboratories, right down to the tier 3 laboratories are able to use our machines. But the bigger opportunity for us comes in the public health space, because many of these diseases are huge public health problems, and the major volumes are driven by the public health programs. In the case of tuberculosis, we have a program called the National Tuberculosis Elimination Program, and this drives the entire TB testing program all over the country. And in this program for tuberculosis, we already have about 9,000 centers using our machine as the frontline test for testing for TB, because as a molecular test, this is a close to 100% kind of reliability factor for early diagnosis. Similarly, there are other programs coming up. So one is the hepatitis program, where we are looking at the hepatitis B and hepatitis C testing, also to be scaled up as a public health initiative, and also to be followed by a program for HPV testing. HPV stands for human papilloma virus, which is the cause of cervical cancer in women. So there is a huge drive to screen women for HPV so that they can be diagnosed early again and put on treatment. So these are all driven by public health programs, not only in India, but globally. And so that's why you will see that the public health contribution to our revenues will be much higher. But then these are all program driven.
All right, and with that, that's all the time that we have on the show for now. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस तेल में।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
ये लीजिए भाई, मैंने बनाया एक व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है? बच्चे हैं? 3 साल। मिस करते होंगे आप हमें ना बहुत। फैमिली विजिट करना अलाउड है? श्रीनगर तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from fact and explain why listening better could mean living better. Only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet.
Buy now, sell immediately.
Hold it, boss.
Buy now,
Sell.
hold.
Buy.
Sell immediately.
Hello and welcome back to NDTV Profit. You're watching Small Cap Buzzers. My name is Puneet Zaveri, and over the next half an hour or so, we'll focus on those key stocks. Also, get you an exclusive coverage of quarterly results of Marico in just a bit. We also have another management lined up post that, so it's an exciting show. But very quickly of how the markets are shaping up. We spoke about the benchmarks this morning. It has been yet again a day we are seeing some pressure coming through yet again. 24,530 odd is where we are at. The heat map also shows you that perspective at this point of time on a bunch of key stocks for the Nifty 50. So pull up the heat map though. Let's pull up the stocks which are buzzing in trade today as well. And you've seen those signature moves come through on Grasim, L&T as well as Shriram Finance. But you've seen the tech space seeing some sell-off. So TCS as well as HCL Tech are down. Apollo Hospital, ICICI Bank are also down in trade today. But when you look at the other key aspects about sectoral heat map though, also pull those up very quickly because you have seen that within those sectors there's not been any kind of sharp runway move. While the Nifty Auto is up 1%, so is the Nifty Realty. They've had some correction and now just getting back. So awaiting the next direction essentially in this week for the markets. also pull up what you have seen in terms of the advanced decline ratio. That is the other key factor as well, because you've seen, the broader markets in this week be very neck and neck. Today also is a day where you're seeing the advances slightly inch up, but from the start of the day, they have gone down a bit, and we'll focus on the broader markets as well. But Marico is the other company. Let's pull those up. So a good set of numbers from the company, but you saw the stocks not reacting too much. They had almost a very strong growth in this year. Robust India volume growth as well as the premium portfolio traction have been one of the key aspects to watch. You also had indications from the management about a growth sustainers as well, but my colleague Mahima Vachharajani spoke to Saugata Gupta, who's the managing director and CEO. Let's listen to what he has to say.
Hello and welcome. You're watching NDTV Profit. I am Mahima Vachharajani, and Marico is in focus on the back of its Q1 numbers. It was definitely a strong set of numbers with India volume growth of 11%. And to try to understand as to how things are going to look like, because management has given a good guidance going forward as well. They remain constructive in terms of execution, and fewer and bigger, bolder bets is where they've indicated it towards to. To understand as to how things have shaped up, how things are going to look like, we're now joined by Saugata Gupta, who is the MD and CEO of Marico, joining us now. Mr. Gupta, thank you so much for taking out the time. Always a pleasure speaking with you. I think my first question to you is going to be about the FY27 targets that you've mentioned. I know we've talked about this earlier as well, and I'm trying to be a little greedy here because you've said in your con call that 15,000 crores ke upar you'll be able to do, right? So just want to get a sense, if you can give us some quantification in terms of how much more can you do beyond that 15,000 crore for FY27?
I think it's very early to give a number, but I think we are extremely confident of delivering double-digit growth to hit 15,000. And I think what's heartening is we crossed the 10,000 mark 2 years ago. So therefore, in 2 years we would have moved from 10,000 plus to 15,000 plus, which is, I think, one of the fastest in the industry. It all depends on how we are going to play out. But as I said, that what is important is continuing to deliver high single-digit growth, and we are lapping high. Last year also we had 8% plus volume growth. So therefore, what is most important is to continue to deliver that high single-digit growth, and maybe just like this quarter, attempt another one, or at least one more quarter, if not more, double-digit growth in a quarter.
Got it. When you say 20,000 crores by FY30, wanted to get more perspective here, because overall there has been a geopolitical situation which has impacted in terms of inflation, in terms of supply chain as well. But on the other side, you've been able to manage that very well. So considering that you want to reach to that 20,000 crore mark, do you think that is largely going to be volume driven? Is it going to be price driven? And largely, if I'm not wrong, it is going to be on account of premiumization as well.
When we take an aspiration, we take a kind of a normalized inflation. Obviously, you have years of high inflation followed by some deflation. Having said that, I think as an organization, we are also aggressively decommoditizing our entire portfolio. The clear drivers of growth is, obviously, we believe in volume-led growth, and therefore this preassumes that we should be able to deliver high single-digit volume growth in India, which is a combination of growth in the core, premiumization of the core, our entry into some of the new categories like shampoo and almond, which is expected to grow, or in cold press oil, which is again a premiumization of the core agenda, and continued growth of 20% plus in our food and digital business. As far as international business is concerned, I think we have had a great track record of sustainable, profitable growth in terms of driving double-digit growth, which we have done year after year after year. And there also we are reducing the concentration risk and driving premiumization in terms of entry into new categories. And that is something which we have been able to do independent of, the kind of adversity we have faced. If you really look at between 20 and 26, you have had 2 years of COVID, 1 year of Ukraine, then we had last year something unique to us, which was 100% increase in copra prices. So we have coped with all of them successfully, and that, I believe, is a unique management capability which we have developed, ability to cope with any adversity and having the agility and resilience to deliver consistent results.
The other aspect, Mr. Gupta, is with regards to the digital first brand that you were talking about, right? There's Beardo, there's Plix, Cosmic 4700 BC as well. They've now become important growth drivers. So going forward, what is going to be the strategy for these brands per se? Do you think it is going to be more towards increasing volumes and sales, or do you also think the focus will be on profitability? And will you be looking at acquisitions more in the digital first brand space?
I think I have spoken about this before, that we don't want a growth which is say 40-50% growth with cash burn. We want growth which is more deliberate, which is I'm happy with even brands growing at 25-30% while we continue to improve profitability. I think we should be able to exit the year close to double-digit EBITDA for the digital business. Beardo already delivers a double-digit EBITDA. We acquired Cosmix, which is a high-teen EBITDA. The acquisition in Vietnam, which we did on a digital brand, already had a EBITDA in the 20s. Plix is heading towards from a high single-digit to a double-digit EBITDA over the next couple of quarters. So I think there are multiple areas, and I think the way we look at digital brands, we see now two platforms developing. One is a BPC, or a premium personal care, beauty personal care platform, and one is a foods or wellness platform. And therefore there are a lot of synergies to be had, and there would be growth. Now coming to opportunities, yes, we will continue to look at opportunities, but I think we have already completed a significant portion of the acquisitions we wanted to do. And we want to focus on growing them profitably, as well as continue to look for some opportunities outside. But a large part of our, I think if we call the digital chessboard, or the portfolio, has been largely filled.
In terms of ad spends, because that has gone up by 25% this quarter, do you have anything in mind in terms of how these are going to pan out for the rest of the year? Do you think that ad spends could grow from here on, considering that this is the common phenomenon that I've seen across FMCG companies, that because of ad spends going up, of course the top line is also increasing. Any thoughts on that?
I think we have been unique in a way that over the last 4 years there hasn't been a single quarter we have cut down on ad spends to manage margins. And if you look at it, we believe that the two things we must do is investing behind long-term brand equity and investing behind talent and people capability. And these are the two things which we have never somewhere cut in, even in the most difficult times. See, I think the ad spends, what we are doing is two things. We have also taken out a lot of inefficient trade spends and other things and converted into spend behind equity. If we look at VAHO, is a classic case where we reduced a lot of trade spends at the bottom of pyramid and converted into investing behind equity in the premium part. Similarly, I think we will invest behind in the core things like shampoo, almond and cold pressed oil, and of course in our food and digital journey. So, and even in international business, there's a premiumization journey and also a deconcentration risk which we are driving from Bangladesh. So I think all this needs money. We will invest behind it, but a lot of these money will come from continuous getting out wastages, and for that we are also investing significantly in analytics, tech and AI, which takes out a lot of spends which are currently not delivering the kind of ROI.
Interesting. Because you talked about premiumization, you've also indicated in the call that you are targeting your premium portfolio to be 50% of your entire portfolio by FY30. Do you think that this growth that you're talking about for premiumization specifically is sustainable, because demand across board is mixed right now, plus on a higher base as well, right? By FY30, premiumization is going to be on a high base as well. Just want to get a sense of the dynamics of how do you think that this will happen, considering the way demand has panned out so far?
Look at the entire premiumization agenda. We are challengers everywhere. So therefore, there is market share to be grabbed irrespective of whether the category grows or not. Look at value-added hair oils. Our value share is 29. And there is no reason why there is a pathway to 40 over the next 3 to 4 years. I think shampoo again is a 10,000 crore plus category. We are premiumizing in cold press oils. And as far as food and digital brand is concerned, I think all this entails is actually a growth of around 20-25% every year, which is very much possible.
And what is the response that you've seen in terms of shampoos?
It's an encouraging start. I think we'll take 1 year at a time. And as I said, that if we can do 100 crore in the first year, it's a good thing to start with.
Okay. All right. Just, one last question in terms of your FY30 targets, because that again, kind of indicates the transformation that, throughout, Marico has seen. Just want to get a sense as to what are the key milestones that you'll be watching out to reach to that 20,000 crore by FY30.
First, obviously, we have to keep on growing at a double digit in revenue, which means that a double digit growth, constant currency growth in international business, high single digit volume growth. We are looking at the numbers as far as the diversification agenda is concerned. I think it should get into 30% plus. And I talked about the food and the digital part of the business growing at 20% plus. And I think one of the other things is continuous mix change, so that we are consciously making a call to deselect, categories or parts which are actually not sustainable in terms of below the threshold level of profitability, and also decommoditizing the business. Having said that, I think distribution is becoming a big part, and our investment behind digital and tech capability in the organization is also going to be a big part of our entire journey.
All right. Mr. Gupta, thank you so much for taking out the time and always, being so candid with your answers.
Sure.
Well, that was the management of Marico. Of course, a lot more conversation we'll take forward with individual stocks as well. But let me welcome in Shashank Udupa. He's the founder at Vayu Capital, now joining in. Shashank, a very good afternoon to you. Thanks so much for joining in. Just the first question, because we've seen, of course, companies like Marico continue to perform well. Within that space, is there anything that you like?
So yes, I think it has been a consistent compounder for a very long period of time, and they have been giving good growth across the industry, right? And I think the CEO just mentioned that they're now going to focus more on the profitability end, and they're not going to focus on things that are not doing well in their portfolio. And they've also acquired a lot of different companies, which are new age right now in the consumer trend, and also quick commerce revenue has gone up quite a bit. So I think overall it is bullish. Yes, the raw material prices because of crude oil spikes for paraffin and HDPE has actually gone up. But I think over a long period of time, there's nothing to worry about.
Got that view. But let's also focus on Mangalam Worldwide now, because, company came out with its results in the last week, has been in focus as well. Stocks done well, gained over 20% just in the last 3 sessions. But it's a good time to talk to the management as well. Let me welcome in Chandragupt Mangal. He's the managing director of Mangalam Worldwide, now joining in. Mr. Mangalam, thank you so much for joining in. It's Puneet this side. Just a question on this quarter. You saw good growth coming through. Revenues were up almost 20% on a quarter-on-quarter basis. How much of that has been led by volume growth in this quarter, and how much has been led due to the price increases that we've seen for steel, amongst others?
So I would say there have been two things due to which the revenue has increased. So one is definitely like what you just said, that the increase in prices of steel. And the second is, as a long-term strategy, what we are doing is we are going more into value-added products, which is we are moving up the value chain. We are a fully integrated facility where we are doing the melting, we are doing rolling in-house, then we are doing finishing of bright bar in-house, and we are then manufacturing seamless pipes and tubes. So as a part of long-term strategy, we are increasing the share of our finished products, which is the bright bars, and also the seamless pipes and tubes. So it has been a two-factor thing, increase in the prices as well as increasing the share of the value-added products.
Got it. So definitely the finished product share is something that you're targeting as well. But Mr. Mangal, how much was in this quarter, when you look at this revenue performance as well as this margin performance as well? I'm sure there was some lag effect and hence they're down on a quarter-on-quarter basis. But how much of the revenue growth has come through led by volumes?
By volumes, you mean the volume of the value-added products, right?
Yes, so the volume actual growth that you've seen in this quarter.
So the value-added products, what we have increased the volume share in our company is from, you can say we were earlier doing around 30%, which has now gone up to 40%.
Okay, got it. So from 30, you've gone to 40% in terms of value-added products, got it. And in terms of what we have seen, that the margins, they were impacted on a quarter-on-quarter basis. Was this largely because of pricing action that you'd seen, or was there any particular other raw material for you that had also inched up and hence the impact?
So as part of the long-term strategy, we are also constantly working on the operational efficiencies as well as increasing the capacity utilization. That has been a key aspect, as well as our share increase in the value-added product has also given us a boost.
Got it. Also, Mr. Mangal, you mentioned that, and in terms of the growth, when you see of the last couple of years, you have been in that range that of roughly around 1,000 to 1,200 odd crores. Where do you expect FY27 to be? Should we expect 14 to 1,500 crores in terms of revenue as a profile that is sustainable at this point of time?
Yeah, we're expecting around, we can say, somewhere between 10 to 15% in the revenue growth.
Okay.
But there will be better growth in the EBITDA margins. That's what we are looking at. Since we are consolidating, going more into the value-added items, focusing more on the costs. So that is the focus for this year.
Okay. And how do you look at the margins as well? Because you mentioned a 10 to 15% growth. So you did about 1,200 odd crores. So definitely 1,300 to 1,350 odd crores is the minimum revenue that you will be at the end of the year. How should we look at margins? Because last year we did see that meaningful margin uptake going to that 8 odd % mark. Do you feel that you will bake into that growth, or is it visible that jump that we saw from FY25 to 26, will that also be visible here, or you'll see that stabilization as of now between that 8 to 9% mark and then follow through?
Yeah, the EBITDA margin, we expect it to be at a stable level from 8 to 10%. Definitely the goal and target is to increase, which it will be. But I don't think that what you're saying, that substantial increase is expected this year.
And just what is the capacity utilization as of now for you in your current plants? Is there any that you have already invested in over the last couple of years where the utilization is ramping up, and anything on capex that you can offer?
The average capacity utilization of all our integrated plants, all our facility comes to around 80%. What we're trying to now do is, like I said, going forward in the capex side also, would be more into the adding capacities in the finished products, which will be the bright bars as well as the seamless pipes and tubes.
And that capex has already happened, or that will be happening in those products?
So we are seeing good demand of our products. We are going into end user market, the approval base, where we are procuring approvals from companies like BHEL, L&T, EIL, and all these companies. Also, we are increasing our market share in the exports. So what essentially capacity is getting utilized, the idea is to invest more and more as and when the capacity is utilized.
Got it. Well, Mr. Mangal, we leave it at that. Thanks so much for joining in, giving us your views on the results as well as the strategy going forward. Look forward to our next conversation.
Thank you so much.
Well, Shashank, let me come back to you very quickly as well, because within the commodity side of things, we've seen multiple key winners over the last few months, led by price increase, led by volumes as well. Does Mangalam Worldwide focus and come back into that list, or are you preferring the larger players for now?
I mean, the commodity cycle is doing well. I think for people who are in that cycle, I believe that it should go on for another maybe year. But yes, these are very cyclical sectors, so we should be very careful about that. One interesting thing also is that Mangalam board has recently approved a borrowing limit of 2,500 crores. So that would be very interesting to note as to what are they going to plan with that excess borrowing limit. And will they over leverage, or will they leverage to a point where the revenue start flowing in as well? So that is something we need to look at. But I think the last 1 year performance has been good for the company.
Got it. Let's quickly look at Jai Bharat Maruti as well and pull up that counter too. Because that stock has hit an all-time high in July. You've seen that peak coming through, and today the stock's down 5%. Could be on the back of results, because while we have seen revenue growth in this particular quarter at 623 odd crores, you've seen the margins actually go down. So EBITDA margins are at 10.06 versus 12.05. Also seen the net profit being largely flattish, and hence, despite the up move that we saw at the start of the month, for the month of August, at least you've seen that correction come through. Now they had mentioned, and the reason for the July up move was that almost the 170 odd crores investment that they were doing in the Kharkhoda plant, that was led by the growth that was seeing for the primary customer Maruti Suzuki, and that 70 crore investment is in phase 2 is something that they're watching out for. So that led to the up move. Newer partnerships between India and Japan as well was another key trigger, but for now stock continues to be under pressure as well. But Shashank, on this particular counter, would you venture in buying at the current price, because we've seen, of course, that correction come through, but there has been a sharp run up before that?
Yeah, I think things are normalizing right now. So if you look at the last 3 to 6 months, we had the GST rationalization where all auto companies and auto ancillary companies did very well. And obviously, if you looked at Maruti Suzuki's numbers and the units that they were selling, they were doing a very good job. And I think right now, even with Maruti's result that you see, we are seeing some normalization kick in, which basically tells that the next few years of growth might not be as big as the base that was there before, right? So I think the growth premium is slowly going down. I'm not saying that the fundamentals might not be great, but I think the excitement factor is slowly going away. And if you look at companies like Jai Bharat and even NDR that is in the same space, they're mostly commoditized players, right? It is not something that they have a very big unique selling point that they actually do, and they're joined at the hip with Maruti. So I think everything depends on how Maruti performs. But yes, I think even though Maruti is growing, I think the growth premium is slowly going down right now with Jai Bharat.
Got it. Let's also look at RD Industries also. That's another counter that's in focus. We actually had the management in the previous show as well, but Parth is now joining in to get us some more perspective on this counter. Parth, what should we watch out for?
Well, the key trigger in RD Industries IPO is that the company has raised almost 128 crores from anchor investors before its IPO, and a big name has appeared in that anchor list, and that is the ace investor Ashish Kacholia. He has picked up 19.57% of the total anchor allocation for an amount of 25 crores. So that is going to be a key trigger for this IPO going forward. If you talk about the details, then the total issue size is 426 crores, out of which 320 crores is a fresh issue, and there is an OFS of 106 crores as well. The 226 crores from the fresh issue will be used for working capital purposes, while 20 crores will be utilized for debt repayment. Now, if we understand the business model of the company, the company recycles lead acid batteries into high purity lead. They serve various sectors like energy storage, e-mobility, automotive and chemical sector as well. They have an integrated recycling capacity of almost 1.57 lakh metric tons per annum, and that is located in Tirupati. The company sources scrap from around 58 countries, which makes them import 87% of their raw materials. So that is going to be a concern there, because they are so much import dependent on their raw materials. And also there's one more concern, that Amar Raja contributes to more than 40% of their FY26 revenue. So that customer concentration risk is going to be there here as well. Now lastly, if we talk about the financials, then revenue has grown at a CAGR of 58.8%, while PAT has grown at a CAGR of over 200% in the last 3 years. Margins have nearly doubled in the last 2 years, while exports have grown at a CAGR of 139% as well. So a solid anchor book and solid financials as well, and that's why Street is very excited for this IPO.
Got it. Thank you so much, Parth, for that view. So of course a big name coming through in that aspect, but Shashank, we'll let you go on that note. Thanks so much for joining in and giving us your perspective as well. Viewers, out of time on this edition of Small Cap Bazaar. Stay tuned though. Ask Profit comes up next.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में।
PMark, the mustard specialist since 1933.
सरसों से सरसों।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from facts and explain why listening better could mean living better. Only on NDTV Profit.
Welcome back. You're watching Ask Profit, the afternoon edition with me, Puneet Zaveri. Over the next half an hour or so, we'll try and solve all your stock-related queries. So if you haven't already done so, send us your WhatsApp query on the number flashing on the screen. Also call us for your stock-related queries. It's the landline number that you can call us. That's also flashing on the top of your screen as well. But before we do that, a quick check of how the markets are doing. We spoke about the pressure that was visible on the Nifty 50 just half an hour back. So pull up the advanced decline ratio and let's get an update of what that is coming through, because while you have seen majorly the advances dominate the day, 1.5 to 1 is the ratio, but you're seeing that starting to come down a little bit. So the last 90 minutes of the trading session becomes very important. Pull up the mid cap and the small cap too. That's something that we missed on to look at half an hour ago. Has been largely a day in the green for the mid cap 150, but just up 0.12%. The small cap 250 is up 0.6% right now. And in terms of the individual movers, yesterday you had a bunch of them reacting, the likes of Ather Energy amongst others on results. Today as well, PNB Housing is one of those counters that's doing well on the back of its quarterly results. Varroc Engineering up 6.7%. While Kansai Nerolac is continuing its bullish momentum post-reporting results in this week as well. Up in the losers though, CE Infosystem had largely a flattish quarter, seeing the stock down almost 6.5%. Kalyan Jewellers also not getting too much of a boost as of now, at least from its quarterly results. Metro Brands, we spoke to the management today, also down 4.2%. But let me welcome in our guest for the show, Rahul Sharma. He is the Director, Head Equity Research at Equity 99 Investment Advisors. We also have Nandish Shah. He is the AVP Research and Advisory at Motilal Oswal Financial Services. Gentlemen, both of you, thank you so much for joining in today. The first question coming through, and this one is on Kaynes Technologies. The results also in this week, so very important one for the company. A viewer actually bought these shares at 3380, and this is Rajiv Mukherjee, who's from Bengaluru. Wants to know about this counter. He's sitting on massive gains as well, and asking what he should do with this counter now. Rahul, very good afternoon to you. How are the charts looking at this particular counter? Would you recommend him to book his profit just before the results, or probably take a look and then take a call?
He should wait for the results out, and because this particular season is morely based on how the numbers are playing, so I think he should wait down for the numbers.
Nandish, if you also have an opinion, because Kaynes Tech definitely had some a weaker Q4 numbers. There were cash flow concerns. How are you looking at the expectations now, because it's already back to those levels pre-correction essentially? How are you looking at it?
So we have been very positive on Kaynes, and we are aware of the issues which especially the cash flows issues. But the management has even promised that that slow and steadily these cash flows issues will get resolved. And one of their big business, which is the smart metering business, is facing that issues. And what you say, slow and steadily that business model is getting changed.
Got it. The next question coming through, and viewers, you can also call us for your stock-related queries as well on the landline number. Vanita from Mumbai has actually bought into DCX at 174 odd, asking if she should still continue to hold this counter or sell out. Rahul, on the charts, anything visible that in terms of momentum continuing right now?
See, the momentum has been a little slow. From the starting of the July month, we have seen a quite decline in this stock, and from last 5 to 7 session, it is consolidating between 185 levels on the upside and downside, I think at 177, 176 levels. So I think if at all 177 or 176 gets break down, the stock can see on like further downside. So I think she should hold on with this strict stop loss level placed at 177. And if at all the stock goes above 185, it can reach towards 190, 192 levels.
All right. Well, Raj, who's from Delhi, also has another question. The question being, what would be the top 2 picks right now, Rahul, on the charts that you are picking up? Anything that you like?
Yes, Puneet, definitely. First of all, this Vedanta Iron and Steel Limited is my selection. It has delivered a strong start as a listed company of Q1. With revenue rising 18%, EBITDA growing by 54%, EBITDA margin expanding by 14%, which was earlier 11%, and reporting a profit of 121 against a loss of 145 crores last year. So I think this is a great selection to get into. Even the CRISIL, which is a rating agency, have rated it as AA stable. So looking at its long-term growth strategy, I think this stock looks good. Technically, the stock has shown good support near 30 levels, which will act as stop loss, and upside long-term journey can continue towards 60 and 70 levels. Second selection is slightly uncommon name, but Azad India Mobility Limited, which is AIML. It is an Indian manufacturing specialized in electric buses and coaches for urban and intercity transport. The company has been working on reducing its debt. With new orders in line, company shall deliver good growth. And now, as they have diversified business towards EV playing theme overall, I think the stock can show us good rally on the upside. The technical charts. On the technical chart, the stock is maintaining its rounding bottom formation, and as soon as it crosses 103, 104 levels, a massive upside is possible. So SL should be placed at 85 levels for the upside journey.
Got it. Well, a very, very smaller name, Rahul, that you picked out, roughly around 520 odd crores in terms of market cap for Azad India Mobility Limited, but that's the expert opinion coming in on that technical pick. Let me go across to Mysuru now, though. Mohan, who's a regular viewer of the show, joining in for a stock-related query. Mohan, very good afternoon. Thanks so much for joining in yet again. What's your query?
I've got TVS Supply Chain Solutions, 76 shares at the rate of 197. I just want to know, I'm holding this share from past 3 years. So I just want to know what your long-term perspective.
Long-term perspective. Got it, Mohan. Nandesh, I don't know if you have coverage on TVS Supply Chain, but has been an underperformer since its listing. Any view that you can offer, Mohan, right now?
So TVS Supply Chain is not under our coverage, so I won't be able to offer any views on it.
Anything on the charts, Rahul? We've seen a pullback from that 101 odd level, but what would your opinion be?
Yes, definitely. The stock has been pulled up from those levels, but